If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello. How's everyone doing? Happy Wednesday. Already halfway through the week. Hope you're all having a good one so far. So we've got a couple of interesting readings on the Edge Finder here. We've got the Russell, Aussie Swiss. We've got the US dollar that's popping up bullish. Bearing in mind, we do have FOMC meeting minutes coming up later today. Gold, Australian dollar CAD, Australian dollar, US dollar, Aussie New Zealand, and Euro Pound, all with bullish readings. For the bearish ones, we've got Pound Swiss, Pound Dollar, Dollar ZAR, Euro Australian, Pound CAD, and Pound Australian. So we'll take a look at some of these, see if we can line up some trades, and yeah, we'll go from there. So I'm already in Pound CAD. I took a position on this earlier today. It's a little bit aggressive, but we'll see how it goes. So what we've got so far is we've just changed trends here, indicating that we've changed out of this bullish trend into a bearish trend. We've double topped here. And these highs were actually a 50% retracement from this high to this low. Unfortunately, I missed that entry, so I had to go in on this one. Obviously, from this high to this low, we've got the 50% retracement into the value zone of the fib. And it's also lined up quite nicely with some previous levels of structure, providing that break and retest pattern that I seem to like so much. I'm not going for a huge take profit on this one. I'm just looking for just under a 1 to 2, just looking to see if we can get down to this fib extension at the negative 61.8, which just so happens to line up really nicely with this previous level of support. And of course, as I already mentioned, we've got Pound CAD on the Edge Finder with a bearish reading. So far, so good. Aussie New Zealand, we're actually waiting for a trade on this one, so we don't have an active position. We do have a pending order, but beyond that, it seems like we actually may have missed the move, which is a little bit unfortunate, but it is what it is. Got a position on oil. This was more of a private position. I don't really trade oil. My typical technical setup didn't come up with the fib. It was more just following the momentum, following the trend, and a basic support type of play. It was very basic, very simple, but yeah, not really anything to cover on that one. And Euro Pound is kind of the last interesting one. So I've been sat in Euro Pound for quite some time now. It's been I think it was, well, I say some time, I think we took it last week. Actually, it's been almost 10 days. We took this on the 9th of February. So we've actually flipped on the Edge Finder, as you saw right here. We've got the bullish reading now, and what we have had was a pullback by 50%. So you know what? With a bullish Edge Finder reading, pull into previous levels of resistance and the fib level, providing again this sort of break and retest, I decided to go in for a scale in. I've already reduced the stop on the initial position to the same level as the scale in, just underneath these lows and also underneath the moving averages. So if it does get stopped out, it won't be a huge deal. But overall, I'm still very happy with the position. It's moving so far, so good. We've also got, who was it? ING is looking for or expecting 0.88 to be tagged in on Euro Pound in the near term as well. So that's a nice little bolster to the idea and gives us a pretty decent target. Sluggy, hello. I am opening today. I do tend to open the later streams when we've got something like FOMC or a Fed decision or something going on. So Nick will be here later. After me, I think it's Marco. And then, yeah, towards the end, when you actually get FOMC meeting minutes, Nick will be here to take over the show. I'm expecting a hawkish Fed. I'm I wouldn't say hawkish. I think hawkish is a bit too aggressive right now for what's warranted. I would say likely neutral, maybe slight hawkish tilt, but definitely not hawkish outright. But also keep in mind, it's not what a lot of people expect is that Powell comes on YouTube or wherever, and it's a stream and we can all watch Powell. That's not what it is. It's a lot more boring today. Meeting minutes is essentially just a recap of what has been said. It's not a live stream or a press conference. So I've still got silver running. So far, so good. We had a little bit of drawdown here, although it was kind of around my average price, so it wasn't actually drawdown. But yeah, so far, we seem to have pulled, obviously, to the downside, and we're having a bit of a recovery now. The only issue I've got with silver here is that we are in a bearish trend, and we are creating these lower highs on this H4. So I'm just a little bit cautious that we're actually going to come lower. That's fine if that does happen. I've got the capital to obviously inject at slightly lower prices, but I do need to be very careful with the management, because what I don't want to do is end up buying or accumulating silver all around here, and it ends up dumping back down to 20 or whatever. I don't think that would happen. That would be a very odd situation, in my opinion. But obviously, you've got to think of worst case scenarios when you're trading. So gold is pulling back to the upside. Now, gold is getting a bullish reading on the edge finder with a score of 6, which is really nice. The downside is there is nothing to trade from. So we're still seeing price, rejecting this level of resistance. There is just no way really to get into this market. I suppose on the positive side, there is this 200 moving average, which is still acting as sort of a dynamic level of resistance, support. But yeah, overall, I can't do anything here. I need to see this break, retest, and then a continuation to the upside, because obviously short term, we're on a little bit of a bearish channel here. So again, just taking some caution. And pound Aussie, I was actually looking to take this one yesterday, but I just didn't get the entry that I wanted. I wanted to see a little bit of a deeper pull into the 50% level towards the 61.8 and just correct a little bit more of this left side, come a bit deeper overall. We didn't quite get that, so I didn't take the position, but I'm still considering it. The overall idea is valid. We did come down to the 50% level and reject, so it's fine. It's just not as solid as I would like. And again, we do have the Aussie US dollar reading bullish. Now, on the other side, we've got Aussie US dollar reading bullish. We've got gold reading bullish. We've got the Russell bullish, and we've got the US dollar bullish. So that begs the question, what's the plan of action? Do we short dollar on Aussie US dollar and on gold? Or do we buy US dollar? It's your decision. You could actually do both. You could take all of them, and at least you'd be slightly hedged. But yeah, I don't know. I'm not really overly happy to see US dollar getting bullish and bearish, if that makes sense. So yeah. Euro pound played out quite nicely. Yeah, Euro pound's doing quite well. What's my thoughts on the Nikkei? Let's see. I actually haven't really checked the Nikkei in a little while. I was looking to be a buyer. Yeah, back down here. Unfortunately, I'm just not getting what I need. So I really would like to see a pullback into these previous highs. Obviously, break, look for this retest, and then enter long, pull back towards the fib value zone, pull back towards the 200 moving average. That would be happy days. I'd love to trade that. But the pullback we've had here just isn't nearly good enough. I need to see it come a little bit lower. Overall, I still think being a buyer is the most sensible option. So that's that. But yeah, it's now just a case of waiting, because if we also look at this left side here, it's very sort of like aggressive, impulsive. I would expect this to get corrected at some point, like we saw over here. Similar type of price action. Then we sort of consolidate, correction, and then, yeah, we move from there. It's just sort of the way the FX markets move. When we have those aggressive, quick moves, we do generally see those get corrected. But it could take minutes, hours, days, weeks. It really depends. Thoughts on NASDAQ? Interesting. I don't really have that many thoughts on the US markets right now. Well, actually, that's kind of a lie. I've got no trade idea yet. I've got no trade planned just yet. I am actually looking to be a short seller at some point. So I'm just watching, because the fact that we've been in this consolidation since the end of last year is a little bit of a red flag to me. So given the fact that after the tariff crash, we just rally, create new all-time high after new all-time high, and then we just flatline and nothing happens at all. And now we've got the H4 flipping bullish. Just makes me a bit cautious. There are some other things that we're looking at as well. But again, as I said last week, when it's not full analysis that I'm comfortable sharing because it's not developed, it could really not work out just yet. So I don't want to start planting seeds in people's minds that are not ready to actually be executed yet. It kind of goes similar for the S&P. So you can see I was actually looking to try and develop a trade and put a starter position in. So on the S&P, what we've got is a moving average kind of cross. It's not super clean, but we are crossing, pull into the value zone. But it wouldn't surprise me, as I said on the Nikkei, to see a little bit of a correction of this sort of aggressive, impulsive candle here. So yeah, I've got no bias just yet. I think I would lean bearish, but not enough to warrant me doing anything. Even for active trades right now, the market's sideways. I can't justify doing anything. Thoughts on dollar yen? So with the dollar getting a bullish reading on the edge finder, I actually wouldn't mind being a buyer. So in fact, you know what? Maybe actually it would be about time to be a buyer. I quite like this. I haven't paid any attention to dollar yen, but maybe I might take an attempt here. So BOJ, I wouldn't really expect them to do anything. I think it's kind of expected they might hike towards 1% or to 1%, but it's still low rates. It's not competitive enough to completely destroy dollar yen's drift to the upside, I don't think, at least not in the long run. The fact as well that the dollar is getting a bullish reading on the edge finder, I think is quite positive. We've had relatively decent data out of the US, which may slow down those rate cutting ideas. I think the markets were looking at April-ish for the next rate cut. That might have been I'm not 100% sure. Actually, I need to check. Likely priced out now after we had the labor data. Was it last week we had the NFP and things? I think it might have been last week. So yeah, we've had this pullback into the fib. We've double bottomed. Prices respecting our 200 daily moving average. So overall, it actually looks really healthy to be a buyer. So I'm going to keep an eye on that one. If we can get this daily candle to close bullish, I'll take God, I'm struggling to get my words out today. I'll take a small attempt and see what happens. What's Elite Traders? Elite Traders is my company. We do mentorships, signals, and that's it. I'm long on the Australian dollar Swiss. So am I, actually. I'm long Aussie Swiss. I was long 1 or 2 weeks ago and closed it or got stopped at break even or closed it at break even. One of the two. I didn't make any money on it though, I don't think. But yeah, I decided to re-enter, basically just following momentum. It was so boring, but you know, profitable trading is boring at the end of the day. If it was exciting, you're doing something wrong. But yeah, I mean, if we just look at the price action, there's just nothing happening. It's just up, down with this overall drift to the upside. So once we pull back to the 100 daily moving average and saw a push to the upside, I decided to execute. It's not a big position. It's actually very small. It's more just to let the trade run in the background, really, rather than a larger trade that I'm going to micromanage. Is there any trade-off on the mentorship? I have very interesting trade code setups. I have no idea what that means, Scott. Sorry. If you could reword that, I'd be happy to answer. I'm expecting a break below trade on pound CAD. Yes. Hello, Alan. Good to see you, my friend. Hope you're well. Yeah, so pound CAD, I'm already short. I'm just looking, well, I'm expecting it to just continue lower. It's in fact, it's probably the most bread and butter setup that I could get, really, according to my strategy. Again, bullish trend here, moving averages cross into a bearish trend, double top, come down, break below previous structure, come back up, retest, reject our 50% retracement level. Then the fib extension lines up perfectly with previous levels of support. And we've got the edge finder reading bearish. So it's kind of just a overall basic setup. It's like in line with all of my checklists or mental checklists for the technical approach. We've also got oil that's doing quite well. So the oil strength also should be one of those catalysts for the Canadian dollar to strengthen as well. So it's kind of hand in hand, really, if that makes sense. So what else do we have here? Did I go over Australian US dollar? Yes, I did. Yeah, so pound Aussie, I'm still looking for an entry here, but I just don't seem to get one. And now I'm kicking myself for closing this position, because if I didn't close it, it would be 7% profit, and I closed it for about 5%. So yeah, unfortunate, but it's one of those things. Excuse me. You've got to make the decision you think is right in the moment, and that's what I thought was right. So it's okay. Yeah, with pound Australian, I'm looking to be short again. I'd like to see a pullback into the fib. That would also be a slight mean reversion towards the H4 200 moving average. Again, very basic setup. But, and the big but here, is this daily time frame is a little bit scary. So with G10, G7, a lot of markets, even stocks, commodities, well, actually, maybe not gold's a good example, but a lot of markets generally have mean reversion tendencies, which basically means when they get too far from like an average price or fair value, whatever you want to call it, they will revert back to an average price and then have a continuation move, which is more following the fundamentals. So I'm expecting some sort of reversion back to the upside, then a continuation lower. As long as obviously the fundamentals stay in play after we've had that reversion, it should be okay. So plan B is if I take a position down here and we get stopped out on a mean reversion move, I'll draw another fib from the daily high to the daily low, and I'll look for this level and take another attempt at that point. So I've got two potential opportunities on pound CAD, pound Aussie, but it's just a case of waiting. I can't do anything just yet. How are we doing today? I'm good, Joshua. How are you, my friend? Sluggy is short pound CAD since the swing high is beautiful. Love to hear that. New camera is very confrontational. I'm going to be honest, Josh. I've got so sick of setting up a camera. I'm just using my laptop webcam. I'm no longer putting the effort in for you guys. I apologize. What's your opinion on Euro Yen? I'll be honest. I've got nothing on Euro Yen. I've got no real bias. Generally upside, and we've got the ECB that seems like they're pretty much happy to be on hold or on pause. We've got the BOJ that likely going to hike towards 1%, but again, as I said with dollar yen, I don't think that's a big deal. It's definitely not enough to change the overall structural drive, if that makes sense. So the drift that we're seeing here. So the fact that we are maintaining buyers here off our 100 daily moving average could be a nice sign that we could see a bit of a correction. We've got this aggressive move on the left side that again could see a bit of a correction. So we'll see. But I think if I had to decide, I would be a buyer. But again, I've got no fundamental or not enough fundamental data really to back up a position here. On the other side, if we were going to argue for the opposite, so if you wanted to be a short seller, you could be saying that the trend has changed on the H4 to bearish here, and we're now pulling into previous levels or previous structure. So this could be viewed as a break and retest, which is very valid. That could also be a play, but that would more be just technicals. Whereas I think if you were trading, if you were buying, you'd be slightly more aligned with the fundamentals. I make trading programs for PineScript. Will be interested in doing a deal. You can try the code first. Maybe. I don't really think I need any indicators though. I mean, all I use is moving averages, but I'll have a think, and if I can think of anything that could be interesting, we could have a chat. Pound yen bias, exactly the same. I think pound yen likely to be a little bit more pressured. However, still overall upside. We've got the Bank of England seeming quite dovish at the moment. So not a great idea. I think there are better options like potentially dollar yen, but yeah, we'll see. Again, I think if we were going to choose a yen pair to trade, I think pound yen is probably one of the worst ones. Aussie yen is the best one in my view, which is why we have this pending order that unfortunately hasn't been filled. But yeah, I mean, with the hawkish RBA, it's kind of the same idea is still there. Australian dollar dominance, buy Australian dollars, not financial advice, and then just sell weaker currencies against Australian dollars. And it's easy, really. again, I'm saying that in hindsight, but that's still my current plan is just to buy the Australian dollar. The hedge fund is reflecting that as well. Aussie New Zealand, Aussie US dollar, Aussie CAD, Aussie Swiss. How can you go wrong? So let's take a look at the Russell. Because I was long the Russell and I got stopped at break even, and I was a little bit salty about that. But it seems like nothing's happened. So I was stopped at break even. Where was it? It was right here, somewhere like within this part here. So I was a little bit annoyed because obviously after I got stopped at break even, I saw this bit of a rally and I was like, that's really unfortunate. However, the market's actually not really done anything. So I think being a buyer is still quite valid. But again, I wouldn't be looking to trade it just yet. We do have FOMC tonight. So if you are looking to trade US dollar or the US markets, maybe just wait till tomorrow. But I'm not really a fan of this price action. I'd like to see a bit of a deeper retracement towards the 100 or 200 moving averages. This 50 looks a little bit precarious. And I can't really explain that. It's more of a discretional idea, but I don't like it when a trend is so aggressive, it's holding that 50 moving average as a support level. It just signals to me that the trend is just too aggressive. At some point, we're going to get a bit of a deeper retracement. That's what I want to be involved with. Not every time, of course, but it's just one of those things. Wait on my thoughts for Australian dollar CAD. Same applies. I think Australian dollar CAD might be a little bit slower. Again, as we spoke about earlier, the oil market's doing quite well. So with oil getting strength, it's going to be a little bit more difficult for Australian dollar CAD to see strength as well. Obviously, when oil strengthens, we can generally expect the Canadian dollar to strengthen as well. So right now, Australian dollar CAD, you're essentially trading two strong currencies. I would say the Australian dollar is structurally stronger than Canadian dollar. However, right now, in the short term, the Canadian dollar is being bolstered by oil as well. So I think there are better markets. Again, right now, long term, Australian dollar CAD could still be quite a good play if oil starts to weaken. But yeah, I think, again, there's better options than Australian dollar CAD. NAS is fishing. What is NAS doing? Oh, wow. Yeah, really nice upside here. What's going on lower time frames? We had a strong market open, which is good. Yeah, I mean, buyers galore on the open. However, nothing's really changed. I mean, we've come to correct a bit of this left side. The H4 trend's bearish. It doesn't look like we're really going to see a massive move to the upside. Obviously, that could be wrong. These markets do move to the upside naturally due to the drift, but I think just according to price action, it's looking unlikely that we're going to have a massive continuation here. How come gold and US dollar are bullish? Because they can be. Gold isn't a currency. Gold is a commodity. So gold and the dollar can simultaneously do the same thing in theory. The situations for the situations that can drive gold higher aren't necessarily the same for the dollar. So people can buy gold and buy dollars at the same time. Whereas it's not quite the same with something like euro dollar, because the euro makes up a large portion of the DXY, which is the US dollar basket. So we often see these pretty much, well, one to negative one, if that's the right word, like inverse markets with the dollar and the euro. But again, gold isn't the same. It's not a currency. One of the most amateur mistakes that traders make is, I'm not calling you an amateur, I'm just saying you need to understand this before you start trying to trade a bit more seriously, that gold and the dollar aren't the same thing, or they're not counterparties really. It's not a case of the dollar goes up and gold goes down, or gold goes up and the dollar goes down. Yeah, as Shul said, like gold is driven a lot off real yields. Well, Shul said geopolitical tensions, but it's also driven off real yields and other things. It's not just, again, it's not just a currency. Can we check Russell? We did take a look at Russell, but I'm not really seeing anything. And I've got about 5 minutes left, so we'll do a little bit of a speed run through any chart requests that are left. But yeah, I mean, I'm not seeing anything here. It's more following the same behavior as what we've seen on the NAS and the S&P. It's just really a range-bound market. There's no direction. So we could argue that the moving averages are in a bullish formation, sure, but at the moment they're actually not really. They're just sort of sideways and parallel, like train tracks, which is a good way to identify a range-bound market. So when we have the moving averages like this, we can quite comfortably say the trend is quite healthy, and we can look to buy. But once they start flattening out like this, it's just a way to say the trend isn't there. There's no real or no meaningful participation to drive that trend either way. Sit out. Shells, hello, good to see you. NASDAQ is at the same price as it was last Thursday. Seems bullish. Does that seem bullish? I'm not sure. And the NASDAQ being at exactly the same price as it was last week is a bullish sign. But yeah, again, I'm just cautious. I'm not saying it's going to crash. I don't want anyone to have that takeaway. I'm not sat here trying to say that the NASDAQ or the S&P are going to crash. Absolutely not. I'm just saying I don't see anything right now. Technically, I'm leaning bearish, but again, I don't really have that much economic analysis to really back up that idea just yet. Oh, you are an amateur? Okay, fair enough. It's a very valid question. But yeah, so it is what it is. So moving forwards, is there anything else we need to go over? Pound Swiss, not really that bothered about Pound Swiss. The dollar ZAR has been a real problem for me. Not necessarily in terms of anything happening. In fact, it's actually the exact opposite. There is no way for me to get into this market, really. I suppose I did kind of miss an entry. Maybe, actually, let's see. No, I didn't. So even the pullback that we did get wasn't in the fib zone, so I couldn't have taken that. Beforehand, there is no way for me to get into this because it's just too aggressive. There is no meaningful pullbacks. Nothing's happening. So, yeah, I would like to be a short seller according to the Edge Finder, but yeah, there's no way in just yet. Now, let's just take a quick look at the dollar, and I will call it. I call it a session after this, and then you will have Marco on after. So the dollar is getting a bullish reading with a score of 6. We've also got the dollar long-term bullish on the, where is it here? Eco Strength Index. We've been talking about this for a long time. The dollar is the only G7 currency that's getting this bullish reading. So the difference between the Economic Strength Index and the top setups is this is more of a long-term view. So you would use this more for multi-week to multi-month ideas. You'd use the top setups really until it disappears off the top setup. So it's a little bit of different use case, but they can be applied together theoretically. So because the dollar is getting a bullish reading on the top setups and is getting a bullish reading on here, and we've had relatively good data out of the US over the past couple of releases, and we've got wash coming in, there is definitely the argument to say the dollar could return towards 100-ish level, which obviously would take it back to this the previous highs here, this little resistance level. Beyond that, I'm not sure. But yeah, I'm in two minds because I think there are real problems in the US. I'm not trying to discount that. But I just find it very hard to believe that this is just going to break and that's it. You know, I don't really see that happening. It could, absolutely, of course it could. But I don't know. Maybe I'm too optimistic. But yeah, we'll see. So plan of action on the dollar, as it's getting this bullish reading, I think it's completely viable to look to be a buyer into just key levels. So places like this, just drawing up previous highs, previous lows, and trading into those levels. I wouldn't want to hold a large swing position on the dollar just yet. I think trading or taking smaller trades into around 100 seems to be the best play. But again, as I said earlier, we do have FOMC tonight. So take caution. Are you a short-term bull on oil, or are you looking to trail stops and have a generally? Yeah, so this is the thing. I am not really an oil trader. So I'm already at break even. So with oil, the only reason I took this position was because of the trend. I saw a level of support, a bullish trend, and obviously oil has already been moving quite well. I'm quite satisfied to take that position. It's not a large position in terms of risk. So, if it doesn't work, it doesn't work. But because it's not a market that I'm overly knowledgeable in or necessarily even skilled in, I'm not willing to just leave it to run like I would with a currency pair, because currencies are like my main thing. That's what I would say is what I'm good at. That's my main thing. Whereas again, oil isn't really that. Oil's more, if I see it moving, there's a nice technical setup and it's clearly bullish, I'll jump in, low risk, see what happens. If it doesn't work, again, no real damage. If it does work, that's a nice little reward for just following the movement. What site do you use for relevant market news? Do you use standard news sites such as Financial Times? Yeah, so I've got Bloomberg, not Bloomberg Terminal. Let me make that crystal clear. I've got a Bloomberg subscription. I think it's like $300 a year, $400 a year or something, but it's just for headlines, news articles, things like that. Reuters is great. My one of my traders in Elite Traders has got a Bloomberg terminal, so he's quite good at giving some news. Financial Juice is great. Edge Finder is obviously great if you're just looking at data releases. Obviously, that updates quite quickly, so you can get those, and it relates to the trade setups and things. So yeah, there's so many resources out there, and you don't need to pay for everything. Like Financial Juice is free. Actually, I don't know what else is free. Financial Times is not free, but to be honest, isn't really worth it in my opinion. I honestly think what you are best doing is, okay, I'm really out of time here. I do apologize, Marco. I just realized what time it was. If you don't want to pay for anything, get Twitter, get on TweetDeck or TwitDeck or whatever it's called, and set notifications for all of the big pages, such as Financial Times, Bloomberg, and just use that. You don't need mainstream media because a lot of it is late. Once it's already out there, the markets are moving. You're too late. There's nothing you can do with that news anyway. So guys, I will see you later. Don't leave because Marco's coming to take over. Thank you for being here. I'll see you all tomorrow. Stay safe and don't get margin called.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone. Welcome to my segment. Before we get started, as usual, giveaway time for DNA Funded. So go to the comment section, go to the link, fill out the form, and you will get entered into a DNA challenge giveaway. So today we are running, let me check. We have a 5K one-phase account. So 5K one-phase account, fill out the form, we'll put your name in the wheel of names, and there will be a winner at the end of or kind of in the middle of my segment. Also, if you have any questions or if you want me to break down any charts, I have the comment section open. I'm watching for the requests, so feel free to make a comment. My watch list hasn't changed, so it's still the same. I still have a Nikkei long that is running. I still have a sell on Euro Yen, although I've moved my stop loss. So this is kind of the update. I moved the stop loss for the Nikkei to 54883. Wanted to trail some profit in. And I moved the stop loss on Euro Yen. You might be asking, why did you move your stop loss? The price is going in the opposite of your forecasted direction. Well, I should have used the tighter stop at the beginning of the trade. So this was kind of my mistake. My stop loss was far too big. But now that the 20 MA has moved a bit lower, I can trim the stop loss. So if I do take a loss, it's going to be a smaller loss. So I'm at least going to minimize some risk. One thing that I've recently started doing is I've started to use the Ichimoku cloud sometimes because Brent Donnelly uses it. And essentially, if we go to that level, we'll be out of the Ichimoku cloud and the trade idea will kind of be invalid. So that's why I put it at this level. I just thought that was interesting. But also it's about 20 MA, as I told you, and it would kind of break this level of resistance right there. Those are the updates with my positions. The thing I'm really looking at is gold. Today, bullish. So blue for the day. We have the Chinese New Year. We have the, or is it called the Lunar New Year? I'm not sure, but it started this Monday. Started 2 days ago. From my backtesting and from my research, during the Chinese New Year, the demand for gold tends to be lower. China is a massive buyer of gold. They have been buying gold for years now. And if China goes offline, if all of those people go on, take a break, go on vacation, the markets are kind of less active or maybe even closed on some days. So the demand for gold is down, the buying is down. That's why you get flat price action or maybe even bearish price action. One thing that I have seen is Edgefinder is pointing to bullish gold. So we're getting a bullish reading, but I personally decided to wait for the new year to pass. So I'm waiting for this period to pass, and then I will consider getting it on a buy setup. The problem that I have with the reading is that the crowd sentiment keeps flip-flopping from bearish to bullish. And that's exactly what is happening. That's a clear reading. It's not a mistake with the Edgefinder. It is just what's happening with the crowd. And it's kind of reflecting this movement. So the Edgefinder, if you didn't know, looks at crowd sentiment. And the retail sentiment for gold is basically the put to call ratio. So if we go to the put to call ratio, we go to gold, you will see it keeps flip-flopping from extremes, which gives me a bit of a unclear reading overall. So this is not a mistake from the Edgefinder. It is just the way that the Edgefinder grabs data. And this indicator is flip-flopping from bullish to bearish sentiment. So I would also prefer maybe a bit of a higher number if we just ignore the crowd sentiment. So we take 6 minus 2, which is 4, and then something else clicks. As far as the data points go, I think we're going to have the PPI soon. Yeah, PPI should be maybe next week. It is. So dollar PPI. That could be a great scenario. Essentially, Chinese New Year passes, PPI prints bullish for gold, meaning inflation is going down. Or let me see, how are we counting this? If you click this, open up an extra window. Let's look at the last PPI just to check. So last PPI came in higher than the forecast, so that was bearish. Yeah, so we need a lower print essentially. We need this print to be lower than the forecast. And then we could get a clear reading. We could start to look for buy setups. As far as silver goes, if anyone is wondering, silver, I'm leaving silver alone. It's below the 20 MA. Just, I think gold is a better play. I think fundamentally gold is a bit better supported. So gold, my favorite precious metal at the moment. This doesn't mean silver can't go up. It absolutely can. And silver is still heavily used in solar panels. And that's a huge industry. So there is demand. There's definitely demand for silver. I just think with the uncertainty, with the current uncertainty, with Trump being in office, with Greenland, Iran, tariffs, Russia, Ukraine, what else do we have? Did I miss something? I think I didn't, but lots of uncertainty. That's my main point. Lots of uncertainty. Gold thrives on uncertainty. So gold loves uncertainty. And I'm still looking to get into the Aussie. So I'm still looking to get into buying the Aussie dollar or selling pound Aussie. My favorite one, or the one that I like the most, is actually pound Aussie. because the dollar seems to be catching a bid. The DXY may have found a support level. See, this is a support level, and it may now be going higher back to the resistance. So back to this level. If that is indeed happening, then Aussie dollar is maybe not something I want to participate in. Then maybe I take a loss on the Aussie dollar. So pound Aussie completely removes the dollar out of the equation and gives me a nice clear edge. Also, to show you, look at the graphs for the Bank of England. So they are scheduled to cut interest rates. Look at the Aussie, look at the RBA. They're scheduled to hike. So this is an awesome website, by the way. When you get a divergence such as this one, you create perfect conditions for the price to just go down, down, and down, because Bank of England is dovish, Bank of Australia or the RBA is hawkish. And that would be about it. Let me check on the dollar CAD. What is the dollar CAD doing? Do I have it saved here? Yes, I do. Okay, dollar CAD catching a bid. Alan, welcome to the stream. Alan says, I love Ichimoku. It's pretty cool. It's pretty cool. And I think Alan is in the dollar CAD, which seems like a pretty good position. We have hit some proper support right here. The dollar is catching a bid. CAD may be overbought. So I do kind of like this story. Let's see, did I miss something from the watch list? No, not really. Let's also remove this. Nah, actually, let's put it back. Because gold is pretty good at the moment. You know, it's pretty good. We have the dollar yen catching a bit as well. I told you I was considering selling the rallies. I kind of went away from that because the dollar is catching a bid. So I much prefer selling euro yen, where the dollar does not have such a huge impact. Euro dollar, pound dollar, okay. Dollar definitely gaining strength across the map. So the big sell-off narrative is gone, is done. Are we in a different narrative? Are we in a different market condition? So 2025 selling of the DXY, is that over? Maybe. Forecast for now, I think we're just going to get stuck in the range. So I think we just continue ranging around this level. I'm going to post the form once again. So in the comment section, check out the form, fill it out, and you will get put into a wheel of names for the DNA funded giveaway. Let's see some more comments. Good morning, Tornier, Aussie Swiss, gold, silver, USD JPY. I just arrived. What do you think of BTC? Well, as far as Bitcoin goes, crypto winter is still the name of the game. So super bearish. I don't see a bullish narrative anywhere on the horizon. I just see bad news, bad price, bad narrative. We can look at MicroStrategy, MSTR. Super bad, you know, just it shows you what's happening with the crypto world. It shows you what the over leveraged folks are doing. And MicroStrategy is definitely, I think it's like buying leveraged Bitcoin. And this pretty much reflects the current environment. Even the Bitcoin price definitely reflects the current environment. And I do think we have more to go. Currently at 47%, I think we can hit 70% drawdown or 70% retrace without an issue. It's a crypto winter. It has happened before. It's just the way that the crypto markets work. Am I completely doom and gloom? Do I think Bitcoin will never recover? No. I do think Bitcoin will eventually go to all-time highs. I do believe that's going to happen, but I think we need to hit some lower levels. If we go to 30K, I think that's perfect to start buying. So like 30, 35, 40K, maybe even 40K. I would say those are some great levels to start building some Bitcoin longs. because at those levels, Bitcoin again becomes a bit of a golden ticket. At 67, if we go to the top or all-time highs, yeah, you're making 89%. But at, let's say, 30K, if we go to all-time highs, you're making 325%. So that makes Bitcoin, again, kind of a golden ticket. That makes Bitcoin super attractive. US 30, USD JPY, USD Swiss. Hi, Marco. Is still safe to enter short on EJ? Well, this is just what I'm doing, so this is not financial advice. This is a signal in the A1 Discord, but again, it's only meant to show you what I'm doing, and it's meant to give you a full breakdown of the position so that you know how I structure trades and that you can maybe replicate my approach for yourself. Now, do I still think this is a good level? Personally, yes, because I'm still with the narrative. I still think fundamentals are pointing to a stronger yen. Nothing has changed really. Yes, we got some bad data out of Japan, but I'm not concerned, to be honest. This is more of a longer term position. You know, it's not a couple of days or 1 or 2 weeks. It's more like 3-4 weeks, maybe even 1 to 2 months. So this is more long term. You're basically getting in. If you get in right now, you're getting in at a better price than me. And if you get in, I would suggest, again, not financial advice, but put your stop loss at 183.788. Trim it a bit. The original stop loss was too big. It was my mistake. USDN. GU. Giveaway link isn't working. Should be working. Euro Swiss looks good to buy. Euro Swiss military complex requires a lot of silver. Well, that's a good thing to mention. Euro Swiss. What about the Euro Swiss? I don't know. Are you catching a bit of a falling knife here? I mean, for this to change the direction, you would probably need to get the Swiss central bank to intervene. Is that going to happen? No, I don't think so. Even the edge finder is neutral and it has a negative score. Personally, I wouldn't buy this. I wouldn't go near Euro Swiss. Dollar Swiss is a bit of a different story. So dollar Swiss, I do have an alert set and I do have this level, these lows, where I think we could produce a bit of a bounce, you know? So I think we could hit this level and bounce from it. So possibly a trade opportunity on the dollar Swiss. Euro Swiss, I don't like it. GP CAD, Joshua, welcome. I also went long Walmart. Every time someone writes Walmart in the comments, I get the image of Jake Paul screaming Walmart in one of his videos, because I think he had his shirts that were sold in Walmart or something like that. Anyway, it's a meme. Walmart looks great. You know, retail doing nicely at the moment. Definitely better than the S&P. Definitely better than the NASDAQ. So nice pick. Not bad. Walmart definitely looks great. By the way, Western Digital. Look at this. Oh, sorry, I was on the weekly chart. Anyway, Western Digital looks awesome. Walmart, let me just check it. Have we sold off? No, looks great on the daily as well. Yeah, nice one. I wanted to show you Western Digital. These are the guys that produce hardware for artificial intelligence. I think they produce RAM or just storage, and they're doing awesome. And they're part of the NASDAQ. So it's not that every single company in the NASDAQ is a loser. You do have some winners as well. You just need to pick the winners from the losers. Hello, Sluggy. Hello, Ballout. Okay, so step away from the brain rot, Marco, please. I can't. I'm too deep in the rabbit hole. Anyway, giveaway time. Let me see the names. Today is the 18th of February. Let's see. Okay, we have some entries. Copy your names. Wheel of names. Okay. So 5K one phase challenge. It's going to be Wyatt or Anthony. Wyatt. Okay, so Wyatt L, congrats on being the winner. After my segment, I will send you the code for the free 5K one phase DNA fund challenge. If you didn't win and you want to expand your trading capital, you want to get funded, definitely check out DNA Funded and use the code A1Live for 25% off. Okay, DNA Funded. So this code is specifically for you guys watching the streams. It's usually 20%, but for you guys watching the streams, we have 25% off A1 Live. This is my personal 25K two-phase evaluation. Current equity is 25.75. I have 2 trades open. I'm trying to pass stage 1, get to stage 2. And this challenge is purely traded by ChatGPT because I'm doing a bit of kind of also a challenge for my YouTube account where I try to get funded and try to get payouts only using ChatGPT. But so far, I'm going to tell you from June 2025 up until now, ChatGPT is up, I think, 36 or 37%, which beats the S&P 500. So good percentage so far. And I managed to pass phase 1 for a 50K account, pass phase 2 for, again, a 50K account, got to the funded stage, but then went into drawdown and unfortunately blew the funded stage. So this is a new one. We're going to try it with a new one. I had a great experience so far. Great prop firm, ran by professionals. There's a big broker behind them. And with the code A1Live, you get a really, really nice discount. Back to the comments. Let's take a look. Watching GBP CAD already in it will add to my winner. GBP CAD. Let's take a look. GBP CAD. Did you buy it or sell it? I don't really see an edge for myself on GBP CAD. It looks flat. Let's see, GBP CAD. Bearish reading, so I guess you sold. Yeah, personally, for me, technical analysis doesn't look the best here. CAD, if I go to my rate probability website, we have the Bank of Canada. By the end of 2026, they are pretty much going to stay flat. You know, current rate 2.25. The rate by the end of 2026 is 2.3, and that's not a change. Like, that's very little when it comes to a change. Whereas Bank of England, of course, is cutting. So yes, selling pound CAD is good. Personally, I think there's a better edge by selling the pound Aussie. I still think there is some room in the position. If you want to do something with the CAD, well, I like what Alan is doing. Buying dollar CAD, not a bad trade. I think this is pretty good. So maybe consider that. But if it fits your plan, if you want to sell GBP CAD, definitely follow the plan. I'm just trying to give you maybe some other ideas as well that also have an edge. Hey, Marco, can you tell me that rate probability website name? Sure. So just write rate probability in Google, or you can write rate probability Bank of England. Should pop up. This is the URL. Let me post it actually. So I'll put it in the comment section. Great website, absolutely free. It's new in the space. I don't know who is running it, but It's an awesome website. Anything that is free and has good information is absolutely awesome. Is today the trading battle? Maybe, I'm not sure. Hello, Ballout. I wasn't able to catch BTC in 2011, but I'll get it on the next run. Sure. I'll be with you. I'm trying to see Bitcoin to, as I told you, 30K. I buy Microsoft shares, 1,000 shares, Google 500, Spider Gold 500 shares. Okay. I'm not exactly sure what you mean in the comment. Okay. I did the oil trade from Nick. Should I take profits? Well, if you're following Nick's trades, just stick to his analysis. Personally, I don't know much about... Where's my window gone? I don't know much about oil. I tend to avoid oil. It's highly impacted by geopolitics. For example, we had a post. Was it yesterday? If we go to the breaking news, we go to market moving. Iran's foreign minister, we have reached an understanding on main principles with the US. It's an understanding. It's not, nothing is written, but it's still bearish for oil. Oil went down and it's up again today. So tough thing for me to read, tough thing for me to trade. Personally, my edge is pretty small in oil. Again, just follow what Nick is doing. He's definitely a much better trader in oil than me. So just follow his leadership on that one. FOMC, I'm counting on it to be neutral. Yeah, we have the, where is it? FOMC meeting minutes. I don't think much will happen. You have to think about who's in the Fed right now. You have Powell. He's a sitting duck. He's a lame duck. Whatever he says doesn't matter. Why? Because he's out in a few months. So I don't think there's going to be much in the FOMC meeting minutes. We do have a Fed meeting. When is that? Let's see. Okay, so the next Fed meeting is on March 18th. Powell is still going to be the main guy. I don't think, again, anything will happen. What the markets are waiting for, they're waiting for the new Fed leader. They're waiting for most likely Warsh. So once Warsh comes onto the stage, once he starts giving some guidance, that can actually move the markets. So Powell, I think he's just going to stay silent and neutral. If he does say anything, I don't personally think it carries a lot of weight for the markets because he's out. Thanks, Mark. Great spin. No worries. Congrats to the winner. Is gold going to keep going up? I took selling order stock. No one knows. No one knows. I don't have a crystal ball. I can only tell you my game plan. My game plan or my expectation is we're flat for this week and the next week, and then we go up. That's my forecast. I'm probably gonna bet on it in so when the next week ends, things can change, of course. Like the edge finder can start to have a bearish reading on gold or a neutral reading on gold, then it's a different story. But at the moment, I think we go flat, then we go up. Are you looking at oil for a potential buy? Nope. Thanks, mate, for the website name. No worries. Okay, so last thing for today before I hand you over, I think, let's see who's next. You can always check on the A1 live stream schedule. Tiger FX. Okay, cool. Is that correct? Yeah. So, final thing for today. What can we look at that we haven't covered? UJ. I kind of told you about UJ. I know I had some questions about, why am I buying the yen? yen is getting bad data. If you go to the Edge Finder and you go to heat maps, you go to Japan, pretty bad. My decision is purely based on the Prime Minister of Japan, the recent election in Japan, where the Prime Minister is super dovish. Her party won a majority, so they will be super dovish. And to counter the dovishness, the Bank of Japan will need to raise interest rates even more. Don't believe me? You can go to the rate probability, BOJ, look at the graph, look at the target rate, look at the current rate. That should be bullish for the yen. And I also think because Takaishi is creating certainty around Japan, she wants to help Japanese companies. She wants to bring capital back into Japan. The yen will benefit from that. As capital keeps going back into Japan, as the carry trade keeps unwinding, I think the yen will keep getting bid. So I'm ignoring the short-term fundamental data. That is correct. I'm ignoring what it says here on the Edge Finder, because I believe the longer-term story is bullish yen, and this is more of a longer-term play, you can say. So that's kind of the summary. That's it for my segment. Again, if you want to participate in the giveaways, I do one giveaway per stream, and I stream 5 days per week. So make sure you tune in, make sure you fill out the form, and you can possibly get a free challenge account. Now I will give you guys to Tiger. Good luck in the markets, and see you tomorrow in the stream. Goodbye.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across, with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader, all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently, with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Tiger here. Hope you all are having a wonderful hump day. It's hump day. Happy Wednesday. I had a couple trades yesterday. I did an Aussie New Zealand and an Aussie US dollar trade. I was trying to take advantage of that Aussie strength that we've had because the Aussie itself has been one of the stronger of the currencies. It's actually at the very top right now. If we take a look over here at our surprise index, guys, this has very quickly become one of my favorite aspects of Edge Finder, just because you can look at a quick glance and see where the strength and weakness is for these currencies. So if you have not got the Edge Finder yet, definitely take advantage. I know Nick's got a 40% promo going on this week, 45 actually, if you chime in, I believe on here. So definitely check that out if you haven't already. It will change your trading life. I can promise you that. But as far as my trades yesterday, Aussie New Zealand, now it's been kind of hovering at a 5, and Aussie dollar as well. So these just barely make my cut, guys. I know I mentioned yesterday I really prefer these assets when they start getting into the 7s and the 8s and the 9s. But hey, like I mentioned yesterday, we've kind of had a little bit of slim pickings, so kind of have to make do with what we have. So when it comes to Aussie New Zealand, this is one where, let me see, I believe I got into it here. Yeah, Aussie, New Zealand. So I was taking advantage of this demand zone that I think I might have pointed out to you guys last week or yesterday. But we kind of broke through this bottom area here to scoop up some more liquidity that was hiding under here. Guys, remember, anytime you see a swing low or a swing high, there's typically stop loss orders galore on the other side of it. So, my goal in life is to always find unfilled orders and to find liquidity. Just, it's basically what the big banks are doing, right? Got to think like a bank. They're the ones making all the money. So we might as well figure out a way to kind of latch onto their coattails and go along for the ride. So, my way of doing that, as always, is to catch these supply and demand zones. So, but yeah, I got into this trade down here, kind of waited for it to roll around. And my whole goal in this trade was just to simply take it to the most recent swing high. Quick, simple little 2-to-1. Got into it here. As you can see, I got out right there at this overhead supply zone. Now, obviously, when you look a little forward, it would have been nice to stay in a little longer, right? But this is trading. You just never know. Quite often the opposite zones will catch price and ping pong it to the other direction. So, in hindsight, that's obviously good. But here's the thing. That's news. That's 1 a.m. So that was obviously the British pounds CPI numbers that came out. So either way, I would have wanted to be out of that trade because you never know when these high impact red folder events can totally flip it around the other way. So, but yeah, that was Aussie, New Zealand. Again, taking advantage of that Aussie strength. I did also get into an Aussie dollar long position yesterday, and I did close out my NASDAQ trade, and I'll get to that in a second. But Aussie dollar, same thing, kind of looking over here at this 2-hour demand. Remember, demand zones for me are always defined as not only the consolidation point, but how heavy, how fast is demand, in this case, exceeding supply. So is it leaving me my gap, right? My gap, like you see there, that's your fair value gap. So I got to have that on every single, indecision candle / consolidation candle. Must. This is an absolute must, right? So when I saw that, I just wanted a simple return to price and a bounce from there. And as always, if I flip over here to Aussie dollar over on my trading view, the whole goal here is to make sure I'm in line with a couple moving averages. Starting with the daily, is my 8 above my 21? Am I getting higher highs and higher lows? Okay, great. So far, so good. And edge finder confirmation. That's the key. Then I like to drop down to a 1 hour. And, for me, I ended up looking for the piercing of the 250. So here's my 50, the light blue, and then the dark blue is the 200. So simple bounce below, as you can see, bounced into that demand zone I mentioned. And same thing. I'm just looking to take price to the opposing swing high, swing low point. So, get out here. And then as you can see, it does go a little bit higher up and just starts getting lazy. So that's a couple nice winners for me. And as far as the NASDAQ goes, this is what I got in on, I believe, Thursday, Friday, but took advantage of this 4-hour supply up here. Okay, this 4-hour indecision candle followed by the gap down, followed by the big drop, bounce into the zone, get into the short here. Now, I had a decision to make on this, and I ultimately chose the 1-hour version. So, on a 1-hour time frame, I was looking at my demand zone down here, this last 1-hour candle up before the up move, as a potential spot to put my take profit just ahead of. Well, as you can see, it came down, bounced a little higher, and went the opposite way. So I ended up giving back some unrealized gains, as you can see my green arrow right there. Why is that? Well, it's because, what do you think of gold? Yeah, I'll take a look at gold here in a second for you, Yazan. If I go to a 4-hour, guys, look what happened. That demand zone is now here. It's that indecision candle. And look at that. Got a bounce there, and then we got a little bit deeper of a bounce before, reversing and breaking structure to the upside. So I wasn't necessarily paying attention to that 4-hour demand zone. I was paying attention to the 1-hour zone below. Well, remember, the higher the time frame, the better. The higher time frames are always going to be typically more powerful than the smaller time frames when we're talking unfilled orders, when we're talking supply and demand. So, why was this one so strong? Why can't we use this candle down here as our demand zone? Right? if I were to just draw up that candle? Why can't I use that? That's the origin of the strong move up. Why can't I use that one? Well, it's because it's pretty well efficient price action in this area. So remember, I have to see a gap. I have to see a gap. So if I look at that candle and I look at the next candle out, that's by definition supposed to be my leg out candle. Well, then you go to the candle after and you can see that the wick overlaps the base candle I was looking at. So that's what you call an efficient price structure, efficient price action. Okay, so that's why on a 1 hour time frame, that's why I was actually going for the 1 hour candle at first, because I had a gap. Right? Had my gap from here to here. Now, a lot of it got covered up, but it did not yet touch the 1 hour candle. So that's why I was looking at that. But in hindsight, guess what? The 4 hour, the 4 hour demand is the one I should have went with, right? Because this is where I have my first gap. Right? There's no gap down here. So that's where it caught a bid and obviously turned price around. So, hey, a few bucks is a few bucks. I'm happy with that overall. But yeah, that was just another lesson to myself. Hey, Tiger, you got to pay attention to the higher time frame, not the lower time frame. So that I could have, taken out the trade down here, putting my take profit just ahead of the 4 hour rather than down here on the 1 hour. So it's just something to keep in mind. We're all trying to get at least 1% better every single day. That's really the goal. The game of trading is definitely monotonous, and it's very easy to psych yourself out and, have paralysis analysis. So if you take away one thing from my 30 minutes today is just look at that. No matter what kind of strategy you look at and trade, just always look for those indecision candles, those basing candles before the strong gaps away from price where demand, in this case, heavily exceeds supply. Okay. It's just a good idea to understand that. And especially, looking down left or top left, if you're, trying to short or trying to take profit up here. So, but yeah, that is that. And let's see here. As far as setups today, guys, I've got some alerts set, but I had 2 alerts set, hit today. And then when I went to check them, the edge finder changed on me, right? So I'll put a lot of alerts on whenever I have a bullish or bearish signal. And I got some stocks in there as well. Again, guys, if you're looking for help with stocks, you can always go check out the check out the stock box as well. It's a really good asset. It's helped me out a lot until I really get the understanding of all the financial readings. But anyway, I had a couple alerts hit today, and they had since those 2 assets had since went to neutral territory. Okay, pound yen, pound New Zealand. These were giving me bearish signals just yesterday. So because of that, I've got to ignore it. I don't want to break my rules and go against the fundamentals. Okay, I want to wait for that fundamental strength or weakness in this case. But pound yen, pound New Zealand, we can take a quick look at those just to see what they were looking like. Now over here on the pound yen, okay, I had my alert hit because we hit this bottom supply. Now I got a lot of colors here. I got a lot of mess here. Which one do I pay attention to? Well, assuming I had a bearish signal, I pay attention to where's the 200 moving average, the 200 EMA. Okay, because the goal is I want to pierce that, and I want to have a supply zone in that same area. That's my goal, or demand if I'm looking to buy. So, yeah, at this point, it's a no-go, but it's a zone on top of a zone on top of a zone. This is actually a smaller time frame over here. So that in itself is a pretty nice confluence. But as much as I want to get in this trade, I can't. Okay, I don't want to go against the fundamentals. So that was one alert that I had that went off. And then what I say the other one was pound New Zealand. Okay, and we were getting some pretty good scores on this last week. Pound New Zealand, pound New Zealand. Kind of a similar situation here. Okay, my 50 is under my 200 EMA. I already know my daily is down. So we bounced into this overhead supply. Now this is a smaller time frame supply. It was actually a 5 minute I looked this up on. Price pierced the 200. Price went over my 80 for my RSI. So that's pretty good. That's a pretty good signal, but it's neutral. And I need some more pound weakness or Kiwi or yen strength if I'm going to be, getting into these trades. So yeah, these are the ones that are hard. It's hard to sit on your hands when you have a good looking technical setup. But as we saw, out, guys, it's all about the fundamental and sentiment analysis first. Technicals at the end. That's just simply a timing mechanism. So anyway, that's the other two alerts I've had for the day. Somebody asked about gold. Yeah, let's take a look at gold because I know it's now on our list, right? I do believe I saw that just a little bit ago. Or it was on the list. Yeah, there we go. Gold 6. So gold and silver, if you look at a 4-hour chart, I've noticed that they're kind of deviating from each other a little bit. Okay, here's gold, but you got a lower high here, but then you have a higher low, and you just barely have a higher high. This wick did pierce this structure, so it did technically break the structure. I'm not too excited about it though, because it broke it, but it didn't close. Okay, I like to see a close. If I would have seen a close up here, well, that would have been, for me personally, the way I look at charts and structures, that would have been a lot more exciting. And then just a simple retracement down to this 4-hour demand zone below, and we'd be off the races. And I don't know what that is up there, so I'm gonna delete that. But but since we haven't broken that structure, I mean, this demand zone is still in play for me down here at the 4780 area. But I think what I'd prefer to see is to get a breakout above and a close. And then from here, get a retracement to a newly created demand zone somewhere along the lines of this double top. So I just feel like we got to see, at least for the way I look at it, I just want to see some more things happen before I get excited about buying this asset. All right. So hopefully that makes sense. Break some structures, and then we can kind of, regroup and look at some new zones. Because if we get this close, this break and close above this, well, now we've got a new impulse leg, right? To where we'd be looking at this swing low and then the new swing high whenever it, finishes forming up. So just needs to be doing some work. As far as I'm concerned, this is just kind of some sideways chop right now. So yeah, just needed to do something. And then silver is kind of the opposite. It's actually forming lower lows. So lower low there, lower high, lower low, lower low. That's different from gold. See, gold's trying to do the opposite. If I just go back and forth between gold and silver, you'll see what I'm talking about. That's another thing I'm not really excited about. I like them to, at least, if I'm looking at a 4-hour or a daily, I at least prefer that they're making the same thing. Either both of them are making higher highs and higher lows, or vice versa, lower lows, lower highs. So, but anyway, yeah, nothing really for me at the moment on that. What was that I just saw on here? So yeah, that's gold. Howdy Tigga, that's me. Is there some indicators it might go lower? Well, let's take a look at the economic calendar. Take a look. Now, I don't have anything today. Let me get rid of now today, I mean, I know they're lighter impact events, but obviously we had some good numbers come out of permits and starts for the homes. Okay. Same thing with durable goods orders. What's a durable good? That's typically something that lasts three years or longer. Right? You want to buy a new couch, you want to buy a new Tesla, you want to buy a new bed, right? Durable goods. So it's not a red folder event, but it's close. It's a medium impact event. It's a good look when we're going out and buying things above and beyond what we have to buy every day, like food, gasoline, things of that nature. So, like I say, not quite red folder, but it's important. And when it comes to these yellow folder and orange folder events, yeah, they're lower impact, but you start grouping a whole bunch of these together, it's almost the same as a red folder, is it not? Right? So that's just kind of the way my brain looks at this. So that's pretty good dollar strength today, if you ask me. And then as far as the index all together, I mean, we're just above 58%. So still, I kind of look at this as still neutral, but on the upper end. I start getting excited if I start seeing 60s or higher, or 40s or lower, or I should say below 40, above 60. That's when I can really feel like I can start counting on this thing. Like, that's a pretty good signal. Strength versus weakness. But yeah, like the piece right before I hopped on said, guys, Ola Prime, that's the company I used to work for. So if you go to their Discord, which by the way, you can find it here, just go to olaprime.com, click on the join Discord button. It'll send you an invite. And then once you're into Ola Prime's Discord site here, if you go to lounge, it's going to be under Ola Prime community. Just click on lounge. And this is kind of like this is where they'll go and help you out for any type of questions that you have regarding trading rules or payouts or anything of that nature. I actually used to be a moderator for them among my many roles I had with them. I did streaming on their YouTube channel for a while. They ended up closing shop on that part, but I was doing a lot of Discord moderating and nobody knew it. I was in here as a pseudo account, but anyway, I've been in here a lot. I'm in here quite a bit, helping people answer questions. So, you know, if you're looking for a prop firm, I mean, there's a lot of good ones out there. But this is one where they've got a pretty cool community. So wanted to point that out as well before I hop off of here in about 10 minutes. Yeah, guys, let me know. I got 10 minutes. If you have any other assets you'd like me to look at, otherwise I'll just take a look at a couple of these top ones we've got. Aussie Swiss, again, Aussie strength. So I'd really like to get into some more Aussie currency pairs. Aussie Swiss, Aussie dollar. See if we can find anything down here. Aussie Swiss. Okay, Aussie Swiss is one where I am interested in, but it's pretty wicky. That's a lot of wicks right there. But obviously the goal is to buy as close to the bottom as possible, right? So if I look down here on the 1 hour, yeah, we're still quite a ways for going over, oversold. In other words, under the 20 level. But I am keeping an eye on a demand zone down here. I'm a little hesitant about this demand zone, though. Part of that is because was it created on its own, or did it get created in another way? Well, I think the answer to that is it got created at least partially as a result of bouncing off of a former demand zone. So that's why I left this up here, just to kind of show that. My goal is to find zones that create themselves, not as a result of bouncing off of another zone, if that makes sense. I want to see where the institutions, the big banks, the smart money, I want to see where they're actually creating that. But if it's as a result of bouncing off of another zone, well, that's quite often where the big boys, the big banks, the institutions, the hedge funds, that's where they're completing the rest of their order. Because think about it. When price consolidates and moves away like this, shows a strong push away, okay, breaks structures and all that. Well, when I see a candle like that, it's only one candle of basing action. That is not a whole lot of time. That's not a whole lot of time for a lot of these big boys to get their full order in. Because remember, they have to accumulate or distribute if they're at the top end of the curve trying to short, right? So perhaps they got in just part of their order. They can't put in their full order because otherwise they'll get slippage like a MF, right? And they'll get a horrible fill. So they buy in, they accumulate part of their position, and then if and when price returns, well, now they've got a way to fill the rest of their order, right? So that's a big reason why I personally do not like buying or selling in zones that are that were bounced off of a previous zone. Please, can you give me $100, please? Oh, so that's 100 times 7. So is that 700? Yes, that's crazy. But anyway, so yeah, that's why I'm just going to be a little bit hesitant on this zone right here, just because of that reason. So I'm not saying I'm going to ignore it. I'm not going to not buy from it, but I'm definitely not going to put on a full position. I'll just kind of tiptoe in, right? Perhaps they started their position. Perhaps here they put in more of their position. Perhaps they want another bounce to fill out their order, okay? So because of that, yeah, I'll still be interested in buying, but we're cutting our risk in half, if not lower, right? That way we can get some type of play like that. As always, guys, I draw this every single one of my live streams that I do in the mornings. By the way, I do 6:30 to 8 a.m. Central Standard Time. I try to avoid Nick's time, obviously, right? So that's why I picked the earlier time. So if you guys are up early, up and at 'em early, if you're looking for a stream, definitely come holler at me at Trade Like a Tire. The link is on the page there. And, just look at me as kind of the warm-up act. The warm-up act before the main act, which is obviously A1 trading stream, right? So anyway, break a structure though. So yeah, I was just saying, I put this on every single one of my streams. So that way it can get imprinted into people's heads. Break the structure here. And this is the important part, guys. This is the important part. Why? Because if you think about it, if we're getting this drop into our zone, well, that's going to be a temporary downtrend, right? A temporary counter trend. So if I'm getting that temporary counter trend, that means I've got downwards momentum. So how do I know when to get into this trade? Well, at the first sign of an impulse leg to the opposite side. Okay, this swing low to this swing high. This is a new impulse leg. How do I know that? Because it broke a structure. And typically it's going to leave in its wake on a smaller time frame a nice looking demand zone. And I think I even said this, I think yesterday, but even if it doesn't have a demand zone, okay, another way around that, if you really want to, is just grab your fib tool and go to the swing low, swing top, look for your 61.8. Okay. Look for your kill zone, that 71.88 level. There's all kinds of different things. The point is, buy it lower on the curve on this small time frame, with the anticipation, obviously, of taking price up to the next overhead supply, which would be up here. Okay. Remember, that's really all price does on the higher time frames. Just bounces constantly from higher time frame from higher time frame supply to the demand and vice versa. So yeah, that's Aussie Swiss. Aussie dollar. I know I just looked at that, but I don't think I had anything else right away right here. Yeah, again, guys, that's a big factor for me these days, is buying under 20 on the RSI and selling over 80 if I'm trying to find a short. So I do have that demand there, but we'll see. We'll see if we can, we'll see if we can get a drop down in there. I was just looking at Bitcoin over here. Yeah, see, Bitcoin is still going sideways. It's still trying to figure out what the heck it wants to do. Remember, it dropped into a daily, weekly, and a monthly demand back over here. We got a sharp push away from it, but all of a sudden, it's just been kind of good, just been kind of dead ever since, right? Straight sideways move. So still pretty neutral from a fundamental perspective as well. So there's still nothing really good as far as I'm concerned on Bitcoin, unless we start breaking some 4-hour daily highs and lows. And as far as win rate, Josh, on my trading accounts, it's been as low as around 35, 40. But over the last quarter, it was up in the 65% range. I mean, I don't know, for whatever reason, my fourth quarter was pretty dang good when it comes to my challenge accounts that I'm in. So, but again, last week I took a 4-day class. I added some more things like these moving averages, the RSI stuff, and all the back testing I've done has been, it's been working pretty well. In fact, I noticed that the 3 of the losses I had last week was just simply because I had too tight of a stop loss. So that's something I've always been like really particular on was, by the books, I was taught wherever our supply and demand zone is that we're buying or selling from, just put your stop loss like 3 to 5 pips on the other side of it. Well, over time, I've started to see that, I get cut out a lot of those, and then price turns around and goes in the direction that I wanted it to go. So yeah, that's kind of my new, from my back testing and my trade journal, guys, my note taking, I've noticed a lot of these trades work out in the end. Just got to give it a little more breathing room, a little more wiggle room, guys. It's a really good idea to do. And one great way of doing that is just simply to put your ATR on here at the bottom. And that way you at least understand how many pips a day, whatever currency pair you're looking at, moves. Okay. And the cool thing with these indicators, by the way, especially if you guys don't have like depending on the subscription that you might or might not have on TradingView, as an example, you can actually kind of combine a lot of these things. Okay. Like for example, I got RSI here. I can move it up here to my chart, or I could just combine it into one of these charts at the bottom. Just click and drag. It's a kind of a cool little trick I figured out a while back, and I've been on this thing for many years, and I just realized that recently. So, yeah, I just thought I'd throw that out there for you. But either way, guys, my goodness, the time has already come. I do think we have Mr. Allen coming up right after me. So definitely, guys, take advantage of Nick's promo going on this week. Okay, Edge Finder promo. Again, hopefully you guys got to test it out for free last week. But if you have a chance, get on that thing, guys. It's going to simplify everything about the fundamental and sentiment analysis. Okay. So with that, ladies and gents, I'll be back tomorrow. Have a wonderful day. Stay safe.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hey everyone, how's it going? We are just shy here of the FOMC meeting minutes. It's going to be just a minute here, so no Jerome Powell speaking from my understanding here, last time I checked. But markets are pretty much moving. Forex has been moving here this week, but we're starting to see a lot of asset classes moving. You got equities moving, Forex moving, of course. The metals are moving. You got silver up 2.5%, or silver up 6%, gold 2.5%, oil's up almost 4% here. The only one that's pretty much pretty stale is Bitcoin. But nonetheless, everything is moving here. So let's go ahead and talk about it. I'll go ahead and share my thoughts and how I'm interpreting the market, and of course, how I'm trading it. So we'll start off with the Kiwi dollar here, down 1%. So as far as Forex goes, it is the biggest loser here on the day. From a technical perspective here, we've actually rejected what could be a level of resistance here at the 6,100 level. And the reason behind the drop here in the Kiwi today is because we did have the cash rate that stayed the same at 2.25%. But you also saw some guidance for the World Bank of New Zealand was a little bit less hawkish than anticipated. So you're seeing traders here scale back those rate hike probabilities. The big question is Q4 of 2026 here, so this year. And we do have Governor Anna here going to be, making some comments there. So perhaps that will give us some more clues as to the Kiwi dollar and the rate expectations, and we'll pretty much go from there. But for the most part, from a technical perspective, if you're looking to trade the Kiwi, I do think that long term you will get some kind of a dollar fade off. The question is when. So a good support level on the Kiwi, I think, is the 58,500 level here, the 0.58500. If we can get back to that level, I think that's a good level to buy. Of course, we do have to go ahead and see what the fundamentals look like at the time. And of course, that's not financial advice, just like anything that I'm going to say on this live stream here. The Aussie dollar, similar situation. I do like the Aussie just because you have that rate divergence with the Australian Royal Bank of Australia and the US. So the Aussie is looking to go ahead and hike the rates while the US is looking to go ahead and lower the rates. We did go ahead and reject this weekly level of resistance here. And I'm looking to go ahead and look for a pullback up into this level, this 6,900. We did get a break. So basically now what I'm looking to do is get the retest now. So if I were to draw this out here, this would look like this. So let's go ahead and put the drawing tool, put the brush. If you can get the Aussie dollar to pull back into this level here, I'd be looking to go ahead and buy and at least target the top end of this range here. And ideally, trade it higher and higher and higher. And if it breaks this retest, then I'll just draw my stop here and then target this level. But we're getting a little bit of ahead of ourselves there. But that's pretty much what I'm looking to do with the Aussie dollar. Now, as far as for the dollar index, we are going to see what happens if we do get to this 98 handle. So I think this next level of resistance here, could be a potential repivot on the dollar. We'll go ahead and see what happens. Maybe the FOMC meeting minutes takes us there, and then as far as the follow through, that would be determined by following data. We have PCE at the end of the week as well, which will definitely give us some clues on the rate cut story. But for now, I'm looking to go ahead and see what happens with the 98 handle here on the dollar index. The current open position that I have is the euro dollar short. It's a 1-to-1 trade. And this basically coincides with the dollar index here. So if I put these two side by side, if I go to the dollar index here on the daily time frame, just so I can better illustrate this, I'm basically looking to target the 98 handle here on the dollar index by going short the euro dollar. So what that looks like is pretty much this 17,600 level here. They're pretty much the same. For those that don't know, the dollar index basket is pretty much made up of the euro by like 40%. So if you ever want to just like trade the dollar index, the best way to go about it is by going short the euro, or if you're trading the spot price. If you want to trade something else, there's ETFs to do that. So but the best way to go about it would be via the euro. And so that's basically what I'm doing. I'm go ahead and reevaluate once we get to this level, if we do get there, to see if you have some follow through or we repivot to go long. But yeah, we'll see. We'll see how we get there. Other position that I have going on is the dollar Canadian long. So, this is dollar Swiss. Oops. Dollar Canadian doing pretty well here. Oil is actually appreciating a lot today. I'll go ahead and touch on oil here shortly, which is going against my dollar Canadian position. But it seems like the dollar is pretty much holding the entire weight here today. So we're still seeing dollar CAD doing pretty well. If anything, I move this stop loss here to break even, and I have a risk-free trade. And I'm ultimately looking to go ahead and target this 1.3900 level, which is 300 pips away. So we do have some ways to go. We'll go ahead and touch on the pound dollar as well, which was a big mover yesterday. So you did see some disappointing job figures in the UK. And last night or early this morning, we did have UK CPI that came out as well. UK CPI came in line at 3%, but core CPI ticked up by 0.1. But pretty much markets ignored that and continued selling the pound. The reason being is that the pound is in a little bit of a sticky situation. So I'll go ahead and touch on that as well here, so you can see the currency strength for today. You can see that dollar is the clear winner in orange, and the pound, or the New Zealand, is at the bottom here, and the pound is also struggling there in green. So you see that right there. But essentially, what's going on with the pound is that you're seeing some weakness in data releases, right? So you can see that the pound here, similar to the yen. Pound is 33% they're in the red, so that means that they're missing most of their data expectations. And if you just look at the economic surprise index history, which if you're trading currencies in like medium to short term, this is a fantastic tool to go ahead and reference here. And I love now that you have a history to go ahead and reference the price action. So you can see that at one point the pound in green was doing pretty well, and you can see that reflected in the price action as well. So you see like the pound was doing really, really well, and then you start to see it actually not so well. So you can see that kind of trade here lower, and you can see that now it's doing worse than the dollar. So you can actually see that reflected in the price action. So if you're trading currencies in the near term, this is a fantastic tool to go ahead and use. But essentially, let's go ahead and look at what exactly is happening with the UK. So if we remember, the US was struggling with elevated inflation and a tricky jobs market, a job market that they were looking to save. And so at the moment, I'm seeing a lot of parallels with the UK and the US. And the way the US was going to attack that situation was by cutting interest rates to go ahead and save the economy, right? The job market. And right now, the UK is also seeing elevated inflation and a job market that is not looking too well. And actually, the unemployment rate here in the UK, so this is the UK unemployment chart here, is at 5.2%, which is really, really high, probably the highest that we've seen since January of 2025. So it's trending in the wrong direction clearly. And so perhaps a lot of people, a lot of traders are basically betting on that, in order to save the market. In the UK, they got to lower the interest rates, but the also thing that they're struggling with is inflation as well. So UK inflation is still elevated, but it's trending down a little bit here. So well above the inflation target of 2%. Right now they're at 3%. So perhaps they go ahead and take the same approach that the US was willing to take, which is cut interest rates in order to save the labor market. And so that's why we're seeing this price action here for the pound. Now, from a technical perspective here, We are at what I think is a level of support, what could be support. So we'll see what happens here. Yesterday, we traded into this level and we got a quick reaction above. And so now we're trading back into this level again today. If we see a clear break below, then perhaps we do have some room to continue following. And in that case, the dollar index and dollar basket will continue to go ahead and rise. If I put some indicators here, you do have that, you know, the pound dollar, this red line, this moving average is the 50-day moving average. So we're hanging out with this level again. The yellow is the 200-day. So if you see a hold below these moving average, then perhaps the trend does go ahead and shift to the downside for longer than we might think. But that's pretty much what's going on with the pound dollar here. As far as currencies goes, the yen is a tricky situation. You have a couple forces at play here. Not something I'm looking to trade actively. Actually, I didn't mean to do that. What I'm going to look for instead would be something like a pullback lower. Now, this was a level that I had as support, but again, I didn't want to catch a falling knife here. So I think I'm going to stay away from the yen pairs. Essentially, what you have is a Bank of Japan that's looking to go ahead and hike the rates, but then you have a very fiscal dove PM at play as well. Then you have intervention risk if we get too elevated. So it's a little bit of a tricky situation. Similar to oil, you have bullish factors, you have bearish factors. In my opinion, I'm only looking to participate if we get to some very extreme levels, specifically on the long side, if I had a preference there. So for the yen, looking to go ahead and buy it at 150 perhaps, or 140. Again, that's long ways to go. So I'm pretty much going to, you know, put that off to the side for now. Let's stay on the topic of the US here. You do see equities actually getting a little bit of a revival price action. So you see the S&P pretty much got to this level of what I think will support at the 6,700 handle. We didn't really quite get into the zone, but we did kind of lift off from there. NASDAQ, similar situation. So you are seeing a lot of inflows coming into the U.S. And I think the reason behind that is because we're pretty much in a sweet spot as far as, you know, macro data. You have inflation coming down a little bit. You have the job market catching some revival. You have growth is pretty solid as well. So I think we're in a pretty like Goldilocks situation when it comes to, or the early stages of what could be a Goldilocks situation for the US, where both of them are actually thriving. If you look at the US economic heat map, it shows you every single metric that you have for the US. And by the way, guys, if you're trading any asset class, I would highly recommend using the economic heat maps with the Edge Finder. It's currently on 40% off sale, so go ahead and snag that as you wish. I definitely encourage you to do so. But essentially what you can see here is that the current landscape for the US is pretty much supported for the US dollar and stocks. So if you look at the bottom right here, USD 58%, which is good. Stocks 58% as well, which is good. So that's why we're kind of seeing both the stock market, our equities, and the dollar actually catching some bids there. So that's interesting to see. Now, as far as the dollar index, what I like here also about the Edge Finder, we just got this new feature. The US dollar is now its own like little asset, its own variable here that you can track on the top status page. And it's actually at the very top of the list, getting a bullish score of 6. So as long as we continue to see that, I'm very open to see what happens at the 98 handle. And if we break above, then I can just trail my stock and then probably target this 100 handle or the 100.5. So awesome thing to see there. The reason why I'm a little bit bullish on the dollar index, we are seeing, you know, our interest rate is currently in the 4s, right? We're in the 4s, and the next rate cut is going to be, as of now, priced in for June to July, right? And we are seeing perceived inflation coming down lower. That's being reflected by the CPI. So if I were to go to the inflation data here for the US, let's go ahead and look at economic data, inflation, CPI. And if you go to the US, you can see that inflation is coming down a little bit. So we were at 3%, and we're now 2.7, 2.4. And so perceived inflation is coming down while interest rates as of now have been staying the same. And what that means for currencies is, you know, a lot of the flows of currencies is pretty much dictated by real yields. And so when you have perceived inflation coming down with the interest rate, the actual interest rate staying flat, the real yield actually improves for that economy. And so right now you're seeing that with the US. So if we look at the real yield, or not the real yield history, sorry about that. Where is the real yield chart? It was somewhere over here. Give me a second. Not this, right here. Okay, so Real yield in the US is still a bullish bias here at the very top of the list. It's been at the top of the list consistently for some time. So this is good to see here. And so that's why I think we are in a very sweet spot right now for the dollar index. Now that's going to change, of course, as interest rates change and kind of trend lower. But for now, that's why we're seeing a little bit of a bump in the dollar. Also, let's go ahead and talk about gold, right? Because gold now, I just noticed this before I was hopping on the stream here. Gold is now getting a bullish reading. So before it was a 5, then it was a 4. So we're pretty much flirting with the bullish score there. And gold is actually getting a little bit of a revival here, near 5,000 almost. But nonetheless, from a technical perspective, you are still in a range here for gold. So 5,100 and 4,700 are pretty much the ranges that I've marked off for gold. Right now, you're pretty much in no man's land. I really wouldn't trade it. Because we don't see any clear technical indicator that there's momentum, right? We are getting a bullish reading on the edge finder. What I would prefer to see is, or prefer to do is buy high and sell higher. So like, for example, if you get gold breach this level, this 5,100 level like this, you break it, retest it, then I would, consider buying it higher. But for now, you're pretty much technically not a good sign. So you always want to blend, or the way I trade markets is blending technicals and fundamentals. And right now you're not seeing that with gold. So as long as we see a consistent bullish score in gold and you see a little bit of a break and retest, then perhaps we go ahead and trade it higher. But for now, this is no man's land. Same thing with silver too. It's an ugly chart. It's relatively weak compared to gold. So although we are seeing some movement today, not really much that I'm looking to do here for gold, but nonetheless, a chart worth watching. Oil here, I did make a chart markup post here for the Telegram channel. So for those that don't know, for those that may be new to the stream, I know we get a lot of inflows when we have these FOMC meetings and stuff like that. There's more attraction to the stream. So for those that don't know, every single day I put 2 chart markups, the 2 most important charts of the day, to keep you updated. But not only do I cover the technicals, I actually cover the fundamentals as well. They're very easy to read, digestible little excerpts that you can look at here. And I promise you, if you do this daily habit for 2 minutes of your day, 3 minutes of your day, you will definitely be you definitely improve in fundamentals. So definitely encourage you. I'll put the link here in the chat. There you go. Someone said, what website is he trading on? This is TradingView right here. But yeah, go ahead and join the Telegram channel. We do have a current sale here for the Edge Finder, 40% off. If I can go ahead and find it. So we're always dropping coupons, daily quizzes every day as well. Sometimes they're hard, sometimes they're easy. If you're looking for prop firms, you have discount codes for prop firms. So definitely free value that you can go ahead and take advantage of. But basically what I was getting at is I made a chart markup for gold today, or not gold, oil, basically going over the range bound price action. And you have a couple things at play with oil. You have some bullish factors. You have bearish factors, right? For the bull case here, you have the geopolitical risk premium, right? So whenever there's times of wars, you do have a risk premium, right? Priced into the fact, just in case you see supply disruptions, things like that, right? But also on the bear case, you do have supply that's expected to be overshooting demand. So that's also another bearish factor here for oil. So you're kind of playing a tug of war situation here. But you do have this level of support here at the moment, 62, and you have this level of resistance, 66.5. Right now, we're pretty much in the middle of it. So if you're not in oil, you pretty much don't trade this. You don't want to chase anything because it can go either direction. If you bought it at 62, great. If you sold it at 66.5, great. But for now, you're pretty much in no man's land, similar to gold there. So I really, really wouldn't touch oil. But something to worth mention, I would like to see oil, from personal take, come lower here, just because I'm in a dollar CAD position, and the Canadian currency is a little bit tied to oil there. But for now, dollar basket is holding much of the weight there. So things are looking pretty good here for now. Bitcoin, the story with Bitcoin here, not too much. It's actually been one of the more boring charts, which is interesting because Bitcoin is usually like a very trendy hype chart, and it's pretty much been flat here for the last couple of days here. We are seeing this global rate hike narrative still at play. So essentially the carry trade unwind slowly now. It was happening pretty fast, but now it's starting to be a more gradual thing. And Bitcoin just hasn't really caught any momentum from that. So maybe we see a Bitcoin slide. Personally, this 50,000 level is a technical level that I think can probably hold. I'm not a crypto trader. I'm not a crypto expert by any means, just a level that I have in mind. But for now, Crypto to the upside or downside looks pretty tricky to pretty much call out. Let's go ahead and see what the comments are saying here. Good morning, everyone. Where did Lambo Allen come from? You look like a Benz Lexus guy to me. Thanks. Don't know. I actually don't have a car. I live in the city, and I use the train and Uber pretty much. And my wife has a company car, so we just use that, and that's completely free. So I'm walking Allen or Uber Allen. I think that'll be a more appropriate name for myself. Porsche Perez. Okay, we're getting sidetracked here. When's Nick's coming? Nick's coming more towards the actual FOMC minutes when they come out. Him and Chris most likely will go ahead and break it down as the comments fall out there. Let's see. I'm in the oil trade and have no idea what to do, waiting for his instructions. Yeah, hopefully you were listening to what I said. Oil is pretty much in no man's land. I don't know what direction you're in there, Zane. So I can't really critique it by any means, but hopefully you're on the long side. I would hope, but if not, I mean, you're just going to be stuck in this range until anything happens, right? So the upside is pretty much dictated by the risk premium going on. So unless you see, if you see escalations continuing to escalate, then oil will most likely go ahead and price in some more risk premium, and maybe you get a pop of the 66.5 level. If you were to see tensions with US and Iran kind of fade off there, then perhaps you see the bearish factors, which is the supply factor and also the repricing of the risk premium, like taking that off the table, that will cause oil to fall. But until then, most likely than not, the most obvious answer would be that oil kind of just trades flat here for a little bit. Any thoughts on New Zealand CAD? Let's go ahead and look at the Edge Finder first for some assistance on that. So we'll go miners only, New Zealand CAD. Let's go ahead and isolate this. New Zealand CAD getting a neutral score. So off the rip, I'm coming into the chart with a bias that it looks like an ugly chart, but let's go ahead and see what the technicals look like here. Okay, so you're pretty much at the upper ends of what this could be a channel here. So the thing with currencies is that they're mean reverting over a long stretch. And you can see this pretty much illustrated by this. So this is basically what this currency is most likely been doing for a long time, right? You're pretty much towards the top end of this very, very long range here. So trading up to the upside, you can trade it to the upside and target this 8,300 level, but then you have all this downside to be mindful of. If you want to be a little bit more selective, then you can probably approach it by doing something like this. Pretty much at this level of support. Again, the situation with the Kiwi is now a little bit tricky just because that we had that rate statement pretty much saying that the RBNZ was a little bit less hawkish than anticipated. So it's not like the Aussie dollar, right? So the New Zealand and Aussie have a lot of similarities. The Aussie is very actively voicing that they're looking to fight inflation by hiking the interest rate. New Zealand dollar now, on the other hand, is no longer on that camp, right? It's a little bit tricky there, and the CAD as well. So if you're not in the trade, then don't take it, I would say, especially if you have a neutral reading on the Edge Finder. If you're in the trade, I don't know your entry, I don't know your stop, I don't know your profit level, so I can't really give you any opinion on that. I'm walking out, respect the transparency. Yeah, man, I'd be walking. What indicators do I use? For the most part, I trade on a very naked chart. The indicators I use is fundamentals, which is an unpopular take. I don't really rely on indicators really too much. When I'm trying to look for like trend and momentum, I just use a very simple 50-day moving average and a 200-day moving average. That's pretty much it. I don't really trade off of indicators like crosses, nothing like VWAP, crosses, Bollinger Bands, all that good stuff. A lot of those indicators are lagging indicators. I don't really use them. I prefer the forward-looking indicators like CPI, GDP, employment figures, all that good stuff. Because when you're trading currencies, the backbone of currency movements is interest rates. And basically, those data points that I just mentioned here are what ultimately influences interest rates. And so I like to follow that instead. But yeah, I like to keep it simple, man. John, moving averages for overall trend direction, but you can also see that with price action. You don't really need the moving average. But like, I guess the only way I would use it is, for example, like let's say euro dollar for example, I had this level of support drawn out. So I'll go ahead and remove the indicator here. I had this level of support drawn out, which is basically the $98 handle on the dollar index. And then I put on the moving averages, and you see that the 50-day is also aligned with this level of support. That kind of just tells me that this could be a good level of support where buyers step in. But for the most part, like, yeah, I'm not really executing on that per se. Oops, didn't mean to do that. If you guys have any chart recommendations, anything that you want me to go over, please feel free to drop that into the comment section, and I will give you my honest thoughts on that. Someone said Meta stocks. Let's look at Meta. What is Meta doing? We'll go to the weekly time frame here on Meta. Don't really know, man. You are seeing a little bit of vulnerabilities in AI. And so you're kind of in a tricky situation where this thing's like relatively chopping. I don't know if your time horizon is long or short, if you're looking to scalp this thing or swing trade this thing or position trade this thing. It really, really much depends on that. How about XAU USD? Life of Untitled. I went over it here very briefly, but I'll give you a very short summary here. With gold, you are in a very ugly channel, 5,100 resistance and 4,700 support. I really wouldn't act on gold unless you see a clear technical break alongside with a strong fundamental bias. So at the moment, you are getting a bias here on gold. So let's go ahead and take this off. We'll say use the, oh no, it's actually gold. So gold is getting a bullish reading here on the edge finder. However, you're not seeing the technicals play out yet. So as long as you see a bullish reading on the edge finder, then there's two options you can do. You can either wait for somehow gold gets a pullback into a level of support, which I think is the 4,700, and trade it higher. But at the moment, it seems like the more probable outcome would be if you see the 5,100 level break. If you get a break and retest and the edge finder is still showing a bullish reading, then I think that'll be a good approach for gold. But for now, at the moment, you're in the middle of a range. You don't want to trade that because you have upside risk, downside risk. So pretty much if you're not in gold, just stay patient and let it play out. No need to force anything. Thank you from Switzerland. Awesome, man. Awesome. Switzerland is so beautiful naturally. I want to visit there one day. Hello, hello. I do have a couple minutes here, have 4 minutes left. So what I would say, guys, please, I really want to emphasize to join the Telegram channel. It is completely free value. And also get yourself a copy of the Edge Finder. We did have a free week where you were able to explore the Edge Finder for free. I hope you guys participated in that. And now you are getting a sale. So I will definitely recommend getting you a copy of the Edge Finder. Thank you for the advice. It's not financial advice, but nonetheless, I'm happy to give you my opinion. Swiss is the best country ever. I don't know, man. I haven't been there, so I can't really speak on it. But from what I've heard, it's a phenomenal country. I'm excited to visit it one day. Okay, let's see. Any other charts that I can go ahead and go over here? I think I pretty much covered everything. Okay, key pound dollar long term. Well, at the moment, they're in a little bit of a tricky spot where they have the unemployment or labor market is just doing pretty bad, and you have elevated inflation. If they continue on the path, if you continue to see the narrative of the pound looking to go ahead and cut rates in order to save the labor market, then most likely than not, pound dollar continues to trade lower. The next level of defense that I will look at where buyers can step in would be something like this here. It could be something like this here if you even shoot lower. That's pretty much the levels that I have on the pound. However, things that can disrupt that narrative. If you see labor market go ahead and get better in the UK, then obviously traders go ahead and take those bets of rate cuts off the table, and you see a repricing back in favor of the pound. So depending on where price action is at, then you can kind of trade the pound to the upside. But for now, the current data suggests that the labor market in the pound is deteriorating a little bit. And one of the ways to go ahead and save that is by cutting interest rates. So just follow the interest rates, follow the monetary policy for each economy, right? Aussie dollar, for example, looking to raise the interest rate so you have a natural bullish bias for the Aussie. The pound, you have a case where they're looking to cut interest rates. So you have a natural bearish case for the pound. The U.S. and the U.S. is kind of sticky. You haven't really had anything new. Everyone has pretty much been in line that June, July is the next rate cut. Nothing much has changed since then. So, that market is pretty much stable for now. You kind of just take every single day as you dissect the new incoming data, and that new incoming data will give you clues as to what a central bank is most likely to do with interest rates. And the best way to do that, guys, I know I keep saying this, but use a tool, whether it be Edge Finder or doing it by hand or whatever the case may be. But every single day, there is some kind of news event, some kind of metric to give you clues on central bank policy, whether it be the GDP, PMIs, retail sales, whatever. They come out, on a weekly basis here, monthly basis, and they give you clues. And the Edge Finder basically does all the hard work by comparing each new data set as it comes in and automatically comparing it to the current landscape. And the thing that's tricky with currencies is that you're trading in pairs. So not only do you have to get all the data points for the US, but you also have to get the data points for the Aussie and compare it how it works. And so this just makes life super, super easy. So yeah, I would definitely recommend get yourself a copy of the Edge Finder. James, if you could let me know if actually, I think I can check myself here. I think Chris is coming on here after me. So I'll go ahead and wait for Chris to come on here. Is there giveaways today? I believe Marco did a giveaway earlier, Jazz. But definitely stay tuned. Like if you want to participate into a giveaway, Marco does a very good job at doing the giveaways for DNA Funded. And perhaps you get one tomorrow or Friday. Love from India, man. That's awesome, man. One of the cool things I love about shout out to Nick and the A1 trading team for allowing me to come on the live streams. But one of the coolest things ever is when you post a piece of content and you see like people saying, love from Switzerland, love from India. That's like the coolest thing ever. So yeah, man. Thank you. Love you too, man. Do you think there will be a reverse for dollar Swiss because DXY is bouncing back? It could be. The next level where I could see the dollar Swiss here, where it could take another turn is 78.5. However, for now, it's showing a little bit of relative weakness as far as the price action. The thing about the dollar Swiss is that the Swiss is the cold currency on the pair, and it's a very safe, attractive safe haven. So if you see a flare up in geopolitics, then definitely you can see the Swiss go ahead and regain some gains. And so that makes dollar Swiss here a little bit tricky to navigate. But we do have Chris Pulver here in the back room here. So I'll go ahead and hand it over to him. Thank you guys so much for watching the stream today. Stay tuned. And yeah, see you guys next time. Bye-bye.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
What's happening, everybody? Nice to be with everybody this afternoon. Usually I'm here early in the morning. Happy Wednesday. Hope everyone's having a good day. Markets are up a little bit. Let's get a quick read on the tape. So S&P up just under 1%. SPY's up 0.9, 0.95 in the SPX. Equal weights up 0.8. NASDAQ 1.38. We've got NASDAQ futures up 1.43. Dow's up 0.6. Russell up over 1%. VIXs are treated a little bit. This is the spike up that we saw on Tuesday last week. Or I'm sorry, Tuesday yesterday. It just seemed all the 20s, all the times we've seen the VIX in the 20s. It just how many times does this happen just this year alone? I sold some more premium this week. Did another trade in the SPY. You saw that in Pulver Alerts, another like $220 of income. I'm not doing as many like naked options. I was doing ratio spreads and naked puts, but obviously if we have a decent flush to the downside, that's going to be a little bit overexposed, at least in the near term with volatility. So I'm tightening up, going like, 50 wide, 60 wide, trying to grab like $200 to $300 on some of these income trades. So that's pretty good when the VIX flares up to 20. I'm doing a little piece this afternoon on NVIDIA. It's just kind of stuck. We have earnings next week on the 25th. This will be a bit of a make or break. I mean, a couple positive things. So I mentioned to Nick this morning, inverse ETF volume. Let me see if I could find, got a little article on this here. So inverse ETF volume, this is a really good sentiment-based indicator. So basically what this means is who feels out there right now, I'm just looking at the chat, who feels right now that the markets, I mean, we're within like 1% of all-time highs, and who feels like it's way worse out there? Like for individual stocks, it is way worse out there, right? We've got the IGVs and the software stock, and you know, this little funny little cartoon came out for AI. It's like it came for software and it killed it. IGV and software getting smoked. It's SaaSageddon or SaaS apocalypse or whatever you want to call it. Financial services, right? All the white collar jobs are going to be gone in 18 months. Trucking, logistics, one like startup company saying they can do everything better and faster. AI is just knocking on everyone's door and just taking their lunch. And you know, the market's treating it like they're all going down and it's all toxic, right? So it's untouchable. And the massive deleveraging that's happening, it feels way worse than what it actually is from an index perspective. But I did say a lot this year. This is why I want to focus heavily on trading indexes, because I think you can avoid a lot of the indecision and volatility. You know, I mean, good companies are getting beat up really, really badly. It doesn't mean that I want to just guess at the bottom. So, I mean, I know Nick has talked about buying IGV, and that's look, we're likely going to have a bounce. I mean, at least technically speaking, we're due for a bounce on IGV, but this is not something that I like calling a bottom on. I mean, if I could sell IGV down here at $50 and say, yeah, I'll own IGV as a basket at $50, sure. You know, but it's like, I mean, in the near term, it's like, you got to treat it like a trade. If you're going to buy this dip, you gotta run it. You got to take a stop loss and like, be smart. Don't guess that this is the bottom. Okay. I could see this bouncing and recovering, but I could see this also getting worse. So again, a lot of volatility. This is down over 30% for a basket of stocks. You look at individual stocks, look at, Oracle. Good Lord, right? Oracle is down, almost 60%. Look at Microsoft. Yikes. Same type of thing. 29%. That's a Mag 7. That's a darling. But I don't like the way the stock looks at all. I've been tempted to sell some premium Microsoft, but I'm not. I don't know if the market's trying to treat this more like a software space or web services. Nobody seems to like Copilot for AI versus other offerings, and now there's a ton of them. If you watch the Super Bowl, I mean, how many AI commercials do we have? Lots. They're all over the place. So anyway, never a dull moment. But on a positive side, what I'm getting at with this inverse ETF stuff is this is a bit of a cleansing of the underbrush, because it feels a lot worse than what it really is. And the speculation is when you see typically inverse ETF volume spike aggressively, that tends to be a good sign that, pessimism is really, really high, and that's a contrarian indicator. So we had the inverse ETF volume at like 43% back in, I think, January, February, like just in the last couple of weeks. And now it's retreated to like 19. So I'm not saying that's a bottom, but to have like the carnage going on underneath the surface and then watching stocks just kind of sit and hang out near these all-time highs. I still think the market is vulnerable. I've said that now, but we clearly are holding this, 6,800 level pretty firm. It's obviously tested a couple of times. Look at the weekly time frame. It's a lot of noise, lots and lots of noise. But if we get a clean break, and really the daily chart's more noisy than the weekly. So the weekly chart, we go back here to December 24th, and to now, it's like we really have had very little direction in the markets. But under the surface, like I said, a lot of stuff is happening, and that's kind of what's been nuts the last couple of weeks. So this green line right here, green line up here is a measured move from this indecision. So if and when we break above, price target around 72.26. If and when we break below, price target around 65.50. So I don't know which direction we're going to break first. I don't really care. But I know that if there is a breakout, we probably will follow this up to 7,200. If there's a breakout here, we follow this down to 65.50. So for me, as far as getting a near-term position, I want to see a clean break and some follow-through, a clean break and some follow-through. I can do some income trades there, some income trades there. You can obviously just buy calls. You can do some spreads, but I'm liking those kind of near-term targets. So we just need a bit more confirmation. I don't know if February is going to give it to us. Maybe the market runs up to finish the month on a positive note, which, for February is not really the case. I still think there's a weakness window, but it could be, maybe we run up through this OPEX this Friday, finish the month on a strong point, and then I don't know, maybe March, April, we start to turn back over, right? I have no idea. But right now, nothing is happening. This is all about survival. This is about, good rotation. If you are, overweight tech or overweight software, you're probably feeling a lot of pain right now. So this rotation is very, very real. And if you're not paying attention to it, you're probably underperforming and you're probably not having a great 2026. So let's go sector performance right now and take a look year to date. Let's go year to date. Our leading stocks or sectors, still energy. This is over 22% last week. Now it's 20. Materials still at 16. Staples at 13. Industrials at 12. Real estate, utilities up. Staples being one of the worst performing sectors of 2025 is up 13.5%. They started off like with an absolute sprint. Okay. I think a sprint pause and then some additional flows could be a good sign. I think if we see the market start, and this is going to be a good sign for like a continuation of a bit of a bull market, is seeing the markets get back into tech, consumer services, some of our Mag 7 darling names. I think it's hard to see the markets go to all-time highs without having the support of mags. So here's a chart on mags. I'm not saying an index here, but as an ETF that tracks the top 7, we're pulled back to this like 23 to 30% fib. Now, there's a pretty good probability that this low from April last year to this high, we did test this 30% retracement. Okay. Typically, when I see this trade, this is a GAN retracement level, and that means that from here, there's about a 65% chance that we will retest this high. Okay. If the mags can retest this high, we will make all-time highs in the S&P. If the mags are going to go nowhere and just keep going down, choppy, backfilling, maybe finding some deeper fib levels like the 382 to 618 zone, it's going to be very difficult for the S&P to climb to all-time highs if the mags is not making highs along with it, or at least rallying back up to revisit the highs. Does that make sense? So I do think we need some Mag 7 love in order to get back to all-time highs in the index. We don't need the Mag 7 necessarily to go to all-time highs, but we do need to see their support because of the market cap weight that they have. Okay. But we'll see. Previous resistance here around $59. We had a low right around that 30% retracement at 60. I mean, I could see this being a pretty good trade. If you're long mags, stop loss tight, does it work its way back up into channels? Does it work way back to the highs? Timing wise, this wouldn't be exactly where I'd say like, this is a great time to buy in February, buying something that maybe already experienced a lot of flows from December or January. Let me see if I have anything. Let me look at some scanners here. Do I have any mags? Let me see if I have some mags. I've got a little scanner dashboard here that I use. Let me go mags. So I don't have any consolidation set up that I'd be looking to trade. Individual stocks on Mag 7, we go Apple, no volatility setup. Amazon, no volatility setup. Meta, no volatility setup. Microsoft, no volatility setup. Nvidia, getting there, not quite ready yet. What am I missing? Tesla, getting there, but not quite ready yet. However, this is what I wanted to show you. The SPY. Okay, the SPY right here. It's very, very rare to see the SPY that is so coiled and pinched, meaning that this is why I went back to that chart originally. I just think there's going to be a directional move coming. I don't know what directional move. In the near term, I'd probably look at something like this. We've clearly seen this range. You can see my red dotted lines are the starting points of the New York Open or opening bell. But this choppy zone, I'll get to gold in a second. Our choppy zone is we have support around 6,800. We have resistance at the 7,000 handle. We've been stuck in a 200-point range for several weeks now. Okay. So if we see, and I'll zoom in here in a moment, but the Thursday sell-off we had last week is a big inefficiency. So I could see that, this little rally that we've seen from the lows last week, rallying back up here, the market's just trying to kind of come back into those inefficiency zones. To me, if I could sell around 69.30, and I could sell around 7,000, I could set up some very low risk trades in this environment to see like if this is a high that holds or a high that holds, great. I'll take my chances. I mean, I could still lose because if I call the top and the market obviously breaks 7,000 and goes higher, I'm going to be wrong. So I want to make sure whatever risk that is, it's very small. But if we zoom in here, look at the inefficiency from Thursday last week. The way that this market sold off intraday, I think the market is just coming after this area. That's about where we are today. So we're stalling here intraday. My blue lines represent the expected move for this morning. So when we opened up, I expected the move to kind of top out here around this blue line or bottom out down here. I've got a trade on that's the green lines are my call spreads and put spreads. So I'm hopefully going to grab a full profit on that today. Okay. So like I said, if we come up into this area, call this supply, if you will, call it a fair value gap, call it whatever you want. This inefficiency, this structure, if this market is going to hit and reject and then roll back over, that's a great spot for a low risk bear trade. Up here to the highs at 7,000, another low risk bear trade. I am okay if I'm going to risk like, let's say $100 to $200 to make maybe, $5,000 or $6,000. I think that'd be a very fair setup if I can get it. I'm going to try to create something like that in options. Okay. All right. What are you using FOMC with a market crash? I mean, do we have FOMC today? Is it just minutes? So we have minutes at 2 p.m. I mean, it's going to be the same old. Like, I don't think the FOMC stuff gets interesting until Warsh is officially in the office, which is going to be May. We can take a look at Fed probabilities here. Go to the CME watch tool. I mean, probabilities haven't changed. We're looking at now out to March. So, I mean, there's nothing happening in February. It's just an FOMC minutes report today, not a meeting, not Jerome Powell at the press conference. So this is still a pause, and then maybe another cut coming in June. So one cut in June, possibly one more September. That's a maybe, but we're still looking at the same thing that got priced in last year, which is 2 rate cuts. I mean, I think that the jury's out, like kind of the coin flip on Warsh. Like nobody really knows if he's going to be a hawk or a dove. I think that the Fed pick was because of loyalty more so than it was, his past experience with the GFC. But it's according to this, like the markets are saying that nothing is changing. It's 2 cuts expected for the year. If it's June and September, okay, fine. If we have something terrible happen, does the Fed step in and intervene? In my personal opinion, I think that Warsh as a pick would most likely let the markets fall faster or further than what maybe Powell was doing in this current environment. We are in, I mean, we're essentially in like the Keynesian economics, right? Where, we think that we can help the markets along, manipulate the markets along, keep adding liquidity, keep propping things up, preventing any type of calamity. And then all of a sudden, when we have to step in and intervene, it's, the damage is already done, casualties, victims everywhere, and the market takes no mercy, but you buy that dip. If that Fed put is put lower, I mean, a Fed put to me is we'd have to pull back to like 5,600 for the market to get scared, in my opinion. Okay. So if we pulled back into this area, I mean, 6,500 good support, 6,150 great support, 5,600 would be a scare, but this just goes to outer trendline support. Okay. So does it do enough technical damage? A little bit, right? But if we bounce here, does it go all the way back to all-time highs, or does it get back to a lower level and, we have a nasty 2017 or 2027, 2028 where we really roll over? And like I've said, even through Liberation Day, nothing good is going to happen on the right side of this trend line. So if we break below this trend line, nothing good's going to happen. This is where we'd really have to have that conversation of, do we think the S&P can drop, 40%, 50%, 60%? And the answer is, I think it could. And none of that's going to be fun. But we're not in that environment. Like, I'm not a bear right now. I just think that right now the market is trying to figure out how aggressively to rotate. We've seen lots of dispersion in the markets, which means you have these crazy runs where stocks are up to 52-week highs and stocks are down to 52-week lows. And that dispersion is as wild as it's ever been. So, the winners are getting paid big time and they're benefiting in massive surges, and the losers are getting absolutely crushed. So you're either on the right side of these moves or you're not. And this is why I'm not necessarily trying to, dollar cost average into things that are really beat up right now, because that might continue the pain trade. The pain trade is deleveraging, right? The pain trade is like what's starting off on a bad note in a fragile bull market or maybe towards the later stages of a bull market. I mean, that's what this looks like to me. If you have a bull market that's led by energy, materials, and consumer staples and industrials, that's not a healthy bull market that's going to have lots and lots of legs. I get that this is the AI build out, it's different this time. It's probably not. If you're in the late cycles of a bull market, or possibly the end of a bull market, if this is what's leading. So I think for a healthier 2026, we need to see some of these other trades catch up. We need to see tech, kind of get its groove back. We need to see, software stuff, maybe give a little short-term pop. We need to see maybe Bitcoin get its shit together, because it also is questionable whether or not we're going to stay around 60K or not, right? Bitcoin breaking 60K is not going to feel good at all. And this is just another pain trade to the downside. I'm hearing more and more rumblings that like younger traders, 18 to 25, are paying zero attention to crypto. Most of them are just trying to figure out if they can have a job and do something in AI, because that's pretty much what the job market requires. So crypto is not nearly as popular as it once was. And there's an argument here that just on Bitcoin, which is at a 1.34 trillion market cap, there's a lot of other stuff out there in crypto, not Bitcoin, but crypto, that probably still needs to be deleveraged. There's still a lot of crap, a lot of scams, a lot of whatever, trash. And if the market's trying to get rid of it and trying to deleverage it, well, then Bitcoin might be a little bit more painful. So, a pretty easy chart until this looks more promising with some type of U-bottom or U-shaped bottom, until this breaks a trend line over here. This is not a position to say, let's be long Bitcoin. I think we have to be patient. Do I have Bitcoin? Yeah, I've got Bitcoin in my portfolio. As this was selling off, I sold calls up here. And as it sold off, I sold calls right here. And my cost basis is actually in the 40K zone. So percentage wise, like I still can have, I don't want Bitcoin to go lower, but I can have it go lower and not really affect my positions. Now, the trade-off is if Bitcoin rallies, then I am sacrificing some of my shares and those are going to get called away. But that's okay. It's not my full position, but it's enough where it's like, okay, if I've got example like 1,000 shares and I let 500 of them go, I'm letting half of that position run, uncovered and hopefully for some more appreciation. But I want to lower my cost basis as much as I can. Right. So again, we might have a little bit more pain left in Bitcoin. So just don't hold your breath. If we go to gold and silver, some of the wildest, crazy stuff we've seen in a long time, we still have this 200-day moving average. It's hard for me to buy gold and think that we're going higher without having another stall. So this high, this low, there's obviously a lot of consolidation in here. I'll zoom in on a daily time frame. This could be a couple of things. We could go high, low, have a Gartley pattern, and this becomes a range trade, right? And this is just nothing but consolidation. And this allows, a great 3-4 year bull market, calm down with some consolidation in about a 30% area. This pullback was around 20%, correct? So high to low, we pulled back about 21% on gold and about 47% on silver. I don't think that gold runs away without at least testing this low again. Or like I said before, I think we're still going to hit this 200-day moving average. Even if it's moving higher, I still think price has to hit it. So the easier trade to me is high, low, lower, high, lower, low. Get the Band-Aid, like pull it off, sever the fingers, whatever you need to do. Get this trade out there so we can start buying more gold and then take this thing for a bigger picture run. But if it's just going to spend days and days and days chopping around here, we can go to a smaller time frame and see it's just lots of indecision. So I'm sure there's some traders out there that are looking to buy gold. If we get a breakout above this level, sure, we can get there. If you buy here, tight stop loss, it goes up to all-time highs again. That could be a good trade, right? But if it hits the same level or it breaks this structure, if it breaks to the downside, I'm looking at this low. I'm looking at those outer trend lines, and I just want to go symmetry. High, low, lower, high, lower, low, hit symmetry. I'm buying plenty of gold down here. 4,000 or lower, I'll dollar cost average all day. And I'm not touching gold for, another probably 1 to 5 years. If we get another crazy run to all-time highs, that's a huge gain. Turn it into a trade versus like I've got to be, YOLOing and diamond handing gold. It's like you don't. Just trade it. So anyway, that's gold. Silver. Okay. I don't know. I still think gold can head lower. I think silver is going to be pressured to go lower as well. We didn't really have much of a pullback here. I could see this chopping around as well, but still struggling to make some higher highs, certainly struggling to make all-time highs. But again, attractive levels. I pulled plenty of trade-ins for the pulver alerts in the 50s. It's like, I think we did 50 by 45s and $40 puts. And we've had some trades in where if I own some SLV, it's going to be down into the 40s, which would be a pretty massive pullback. I think it'd be like a 60+% discount on current highs. So, any ownership for me would be probably low 40s or mid 30s. That's a massive, massive pullback. So, and again, I might not own any shares of SLV outside of what I already own, and I would just hang on to what I have. But if I'm selling some premium, I mean, the IV was so high during this run up that when we had this huge flush to the downside at a 47% correction, we had a pretty solid way to sell some premium there. So this high to low, we had a 47% correction on silver. So yeah, I mean, I sold a lot of puts between 40, 45, and 50. I positioned a decent amount where I'll make a couple $1,000 on that. Okay. All right. So that's some gold. That's some silver. Oil. Let's take a look at oil. Oil at 65. Let me check on something. I put a trade in for oil futures. I might end up canceling this trade. I've got a working order, 69 by 70. I'm risking 1-to-1 in this trade. This would be 69 and 70. Let me check CL. 69 and 70. I'll still take the trade. I'll take the trade. So what I'm doing on this one, I'll actually post this. I just put this in my broker platform. It's still pending. So if anybody's interested in the trade, you're risking 500 to make 500. And I'm basically looking to see, can oil stay below $69 or stay above 55? So if we stay below 69 and we stay above 55, okay, I mean, oil can do whatever it needs to do. Every time we've seen like a run up in oil, it tends to get smashed back down. I'm looking to see if I can get filled at a 50-cent credit on CL. So /CL is oil futures. I'm risking. So if oil just blows higher, this is what I look for. It blows higher, pulls back, blows higher, pulls back. So if I can get filled on that trade, I think we got a pretty good chance for a 1-to-1. My goal is not to hold it all the way to expiration. My goal is to get filled at 50 cents. And if I can see 50 cents become 30, 25, or 20, take a 50+% profit on that trade. Okay. So I actually do like the trade. I'll post that right now for pulver alerts. This is going to be in the, let me go to A1 trading. This is going to be under my, well, it's oil. So you want me to put it under commodity trades? You want me to put it under futures trades? I mean, CL is a futures trade. I'll put it under, it is commodities. I mean, there's oil. I don't know. It doesn't matter. I guess futures would be more if I'm doing index futures. So I'll do commodities. I'm going to put it in the commodity tab under my Chris Pulver trades. So new trade, CL. I believe that was an end of March expiration, March 17th. So 3/17 expiration. I am selling the 69 and I'm selling the 55. 50 cents credit. This is a 1-to-1 setup. Iron Condor, where I'm selling high. So selling premium high and I'm selling premium low. And I want price to stay in the middle. If filled, 50 cents credit when it shows, let's say, 30 or 25 debit, I'll look to close for 40 to 50% profit target. Okay. That is getting posted under commodity trades. All right. That's in for pulver alerts. Currencies, look at the currencies in a moment. Somebody just got Meta. Okay. My daily profit like today is up $93. That's most of my profit there. I've got to take profit on this morning around 15 cents. It's getting closer. Getting closer. Hopefully I hit that take profit. That'll give me $100, $100 on the day. Keep an eye on that for oil futures. Somebody asked about Meta. The hyperscaler stuff, it's two things about Meta. They're all in on AI, just like they were all in on metaverse. Obviously, AI is a bit more of a positive narrative. The problem is the markets are now a little skeptical of this hyperscaling spend. Couple things. If CapEx grows, it takes away stock buyback potential. Okay. So that's some added support that could be gone if CapEx continues to grow. Also, like valuations and concentration risk, like this is why the Mag 7 stuff is like, this is why this rotation is so aggressive. Mag 7 concentration risk, right? I mean, if you're eating into profit margins and competition is growing very, very stiff, you know, the deep seek is coming all over again. We've got like basically open source free AI coming from China, and it's again proving to be very disruptive. So, you know, look, Meta's $641. I know on paper fundamentally it looks great, but you have to remember this is like a great lesson for Meta. It was down 76% in 2022. So just in case this market is going to have to cleanse and rotate and get out of some of this high concentration, this could hurt. You know, I mean, this stock's down like maybe 15%. We're down 20%. We had a little pullback about 26. I mean, it could get way worse. So even a pullback to this, you know, Liberation Day low, it's like, okay, that is a 40% correction. If you go back to, you know, 2022 bear market lows, I mean, would I own Meta at $100? Sure. I wouldn't even think about it. Okay. But what's that pullback, by the way? If we pull back to $100, Meta would be down 88%. So here's what I'm going to do. I believe that I can find a good trade on Meta. It might take 12 to 24 months to do it, but let's look at it. If I went out to December 2027 or January 2028, which is a long time. Okay. If I go to $100, and this is crazy, but that's the bear market low of 2022 at $90. So watch. This to me is look, this is a boring trade. You're going to make little to no income on this, but it's safe. Okay. So for a safe $50 income, I could own shares at $90 on Meta. The chances of that happening are 0.5%. Okay. So could I load up on some puts? I mean, I could probably do something creative. I could just do I don't know, let's do a 110, 100. You own the shares at 105, you get $1.67, your break even's 103. That's okay. But you're going to tie up 20 grand. I don't like it that much. You know, a ratio spread, if I buy the 110 or the 120, sell the 110, I mean, I'd probably finesse this where I can at least get $1. I mean, that's only 90 cents. That's $1. So I mean, a 140 by 130, but I don't own it where I want. So I don't know. I'm going to just kind of wait and see, because right now, like, what if this is all just a big fat setup for a monster rising wedge? And how does this play out? Well, we either break the structure and we come back to this point anyway, and then the market's at a high. Is this setting up? Like, look at this thing. This could be a giant bear pattern. Could it be a bear pattern if it comes back down here? Sure. And then it's all the way back down to fulfill. Now is where you want to buy it. And that's probably a, you know, great, let's say, lifetime opportunity or generational, whatever opportunity to buy Meta. But I'm just not that excited for $640. It's more expensive than the SPY. It's the same price as the SPY. No thanks. So anyway, what's up, Nick?
Hey, Chris.
How are you, man?
Pretty good. Hey, I had a scenario. I was listening to a little bit of what you're saying. A little scenario to maybe map out at least where I am with stuff. I know we talk pretty frequently, but I was thinking about this morning. Literally, I was in the shower and I was like, you know what? I'm thinking about. Here's everyone. By the way, what you think about in the shower says a lot about you. As you might imagine, I think about markets, but I was thinking about this concept, exactly what you're saying. It feels that stocks are still pretty pricey. I don't really see like a ton of just sort of obvious bargains. You mentioned like getting Meta down in 2022. I bought shares in 2022. I felt really smart about it. I mean, it just felt like an obvious. I mean, obviously that is hindsight speaking, but it felt really easy to pick up good names and to kind of throw them away and or stow them away and hold on to them for a while. And I just don't see that same easy investing kind of decision making. Not necessarily that it's easy, but easy to decision making. You know, sometimes it never feels good when markets are down, but you kind of can be like, okay, I know I'm supposed to buy some stuff here when it's down like this. This is some good, you know, value that we might be getting here. Well, I had this thought. I was basically thinking about it, and I was like, you've had some decent volatility here recently. Let's say the VIX, we've talked about this in the past. Let's say the VIX, stays somewhere around 20 for a little while. You're getting decent premiums on selling out of the money puts on stuff that you might like for the longer term. I also have stuff, these are out of the money puts. In the meanwhile, I have stuff sitting in SGov, which, is collecting around 4% right now because interest rates are still elevated in the here and now. I've also got some momentum trades going on my oil trade. So I'm doing some stuff here on the active side, but I am sitting on a good bit of cash, but I actually kind of in a weird way feel okay with that because I'm sitting in SGov collecting something and I've got, cash secured puts that I'm willing to sit and sell on. And, I was thinking about that. I was like, if I can kind of shoot to get 0.75% per month or 1%, maybe 1.25% on the cash secured puts that I'm selling, like on that cash, I can kind of sit there and collect some income and wait for maybe that more obvious time to come again. And I know that's kind of your bread and butter is to create income when there's not necessarily the easy opportunities in markets. Is that
Right.
something you're kind of finding yourself doing this year so far?
1000%.
Yeah.
I mean, it is, look, I'm staying so far out of the way to collect the income that I think is safe, reliable, barely getting any assignments. In fact, I don't want any assignments really. But the markets have to stay like kind of attached to this like pretty positive narrative that things are looking okay. Things are resilient. Things are coming, right? All the tailwinds are still here. All the good stuff is still here. Just this last week, I mean, Kathy Wood popped up in a couple of podcasts I listened to, and I mean, she seems to think that the bottom is in, and off we go to the races, and it's just nothing but bulls and fun, and we're this. I'm quoting her. It's like we're positioned because we've been doing AI for 15 years. I'm like, have you? Have you? I mean, I get that their ARK, ARKK is out, looking 5 to 10 years with disruptive tech. But if you own ARKK, you're pretty much owning Tesla and a couple other companies to go with it. I mean, if you look at the holdings of ARKK, the weight is heavily weighted towards Tesla. And look, I've got Tesla trades. I don't need to throw ARK on top of that. But the other stuff, I'm like, all right, maybe they're onto something. But I don't think they know or anybody else knows like how disruptive this AI narrative is going to be. And the big, beautiful bill and everything coming this way. It's like, look, we have a lot of unknowns for 2026. I think that right now there's a lot that would have to happen. Like we'd have to have like an exogenous shock again to have the market really turn super, super bearish in 2026.
Yeah.
So that is why I think under the surface, we're seeing so much carnage in like the toxic get out deleverage space. But at the same time, and when you're seeing institutions and hedge funds ramping up short-term leverage to buy puts, it's just to kind of limit exposure. And obviously, like things that have been down and have been beat down and they're making 52-week lows, it's like they're just getting trounced right now. But meanwhile, you got stocks that are making 52-week highs that are up, 20, 30, 40% to start the year.
Sure.
That's a bit, like I said, the dispersion trade is so crazy that the indexes are like, it's almost like there's so much happening under the surface that the indexes don't know what to do. So they're just treading water. And we're going to try to find out like, okay, maybe what's been beat up. Here's one way you can kind of broaden out the market. Okay, here's the index, right? This is the index in the S&P. What's been getting beat up versus what's been rallying, it's kind of neutral for the index because it kind of levels itself out. But if we have a continuation of what's good and a recovery of what's been beat up, then we can get some momentum to the upside, right? The downside is if we fall from what's been rallying and we continue with what's been harmed, I mean, then we break to the downside. So the market just hasn't made up its mind yet. And I just think this is why I'm, like you asked, I mean, I'm just selling a bunch of premium out of the way for income, and I'll just sit and wait. And I don't want to sit on my hands all year, but I also feel like this is not a good time to be allocating heavy positions at these tops.
Yeah, I agree with you. And I think, I mentioned I'm taking some stabs here on oil. Someone in the chat asked me to clarify a little bit of the oil side of things and what I'm doing with it. So I went long oil. A couple days back, we had some more solid readings. Right now, Edgefinder's giving it more of a neutral reading, but I just want to kind of highlight this a little bit. People ask me, Nick, was this a in response to Iran and US kind of going at it and all that stuff? And the answer is no. I hardly ever trade based on geopolitical headlines because I find that to be a very difficult I explained it in my videos here recently as chasing your tail type of trading. It's, you're always kind of behind the headline. But from a macro perspective, just a general synopsis of where we are. We do have inflation still above that 2% target. Economic growth, at least from a total output, perspective, not necessarily how every individual consumer is feeling, but from a services PMIs, manufacturing PMIs, and GDP growth, we still have, some strong figures coming in. We also had a pretty strong jobs report recently here, that 130,000 jobs and the 4.3%. So I'm kind of seeing on the demand side some changing forces for oil. So I do still like it to the upside, although, as I mentioned, Edgefinder went from bullish, you can see the score plotted over time, to now a little bit more neutral here. I wouldn't be chasing it right here, adding a bunch of longs, but I went long a couple days ago when we hit this support level. And so my plan for oil is we have a big decision point coming up. And I think it's pretty clear where that level is. When we look at this chart here, you can see it is going to be that spot here where we previously have fizzled out, where we've stalled out a couple times, this $66 a barrel mark. I'm looking at US oil here. If we can get above and beyond that, perhaps we actually have some more sustainable upside move. Maybe energy stocks maybe go on a little bit more run. Maybe oil has a longer term bottom. The difficulty with oil, and it was mapped out really well within our Telegram server. Alan, who was on earlier, discussed a little bit of the supply issues, right? There's plenty of supply coming online for oil. That is one of the downward pressures. But, the geopolitical tensions don't seem to be going away. So if I balance it out and I just take a look at the macro, I still feel decently okay with looking for oil longs. I also like the price action. Seems like we've got a positive directional move here on oil, and we'll see where that goes. The other one that's interesting, Chris, is you've got the dollar firming up here, trying to make a move back up into back above 98 here. That's the strongest we've seen dollar in a minute. It still, has some resistance overhead. Any thoughts on US dollar? Any on yields? Anything on that front?
Dollar strength. What I don't love is dollar strength somehow getting the markets to go higher. I feel like dollar strength is ultimately going to kind of weigh on stocks and equities a little bit. Dollar strength to me, at least the short-term trade, this is what I talked about. I did a top-down session on Monday during the President's Day when the holiday was, markets are closed. But I said, this is a low-risk trade. If you get in now with dollar, you got upside here to 100. And the reason why is this is just a very crowded trade. Everyone's talking debasement. Everyone's talking weaker dollar, blah, blah, blah. I think we just spent some time sideways on the dollar.
Yeah.
So I could see us at least heading back up towards 100 handle. I think the real surprise would be if we go higher than that, Nick. If we go to, let's say we get above 100 and we just measure this box, like you have that move, you break out there, and all of a sudden we're coming back to this inefficiency around 104, 105, 106. I don't think anybody's really taking that trade for 2026.
Yeah, I agree. And here's my other chart I like to show when I'm talking about when I'm looking at currencies, not from necessarily what's going to happen in the next week or two, but rather looking beyond, next couple months. I do still generally see some upside to the dollar. We've talked about this many times on the channel. This real yield giving, one of the strongest real yields out there right now is still the US dollar.
Right.
Again, to your point, everyone's kind of on the, dollar de-dollarization hate trade. And I just think it's always a little bit more complicated than it seems. People love to kind of bash the dollar and say it's a worthless currency, but as we always say, you and I have done this 1,000 times, it's the least dirty shirt in the laundry basket, at least in some ways. So I would say dollar index has potentially more upside than downside in the next couple months. That would be my opinion, of course. Not financial advice, and I could be dead wrong. That's why we, manage positions and we size risk appropriately. But just my thoughts. I think the dollar has a little bit more upside than downside right now.
Yeah, I agree. And dollar going up too, that'll weigh on gold. I still think that correction I'm talking about in gold hopefully plays out. Let's see what happens. So I just closed out this SPX trade this morning. So that was $1.15 that I just closed out for 15 cents. So I'm happy with that win on the day. For the most part, everything looks like it's going to stay inside my blue levels, which is my market maker move. So that's good. I'm happy to get out of that trade this morning. I'm trying to think what else. For the day, we've got a major OPEX on Friday. VIX has calmed down for the most part, but we've gone from a 23 VIX down to about 18.5. guess what, Nick? If the VIX flares up above 20 again, guess who's selling premium?
Yep,
This
me
guy.
too.
Like that's
Me
all I'm going to
too.
do is stay out of the way, keep selling puts. Here's an example, by the way. You'll see this in the Pulver alerts. If we go back to 20 plus on the VIX, I'm going to look out to probably here's where I'm stacking a lot of my trades. I'm going September. This is SPY. What's interesting is we don't really show any October, November expirations, but we can go September, December. So I've been doing a lot of December. So December 18th, 31st, and January 15th of 2027. I'm just going below the April 2025 lows and selling like a 30 wide or 50 wide or even up to 100 wide. I'll give you an example. If I go Jan 15, this is not the trade I'm going to take now because the VIX is only at like 19. So I want to see the VIX back to like 22, 23, and I'll sell some premium. But here's an example. If I go January 2027 and I go to the 480, okay, so right now I could sell a 480 put and I could buy the 400. Now that's my maximum risk would be, $7,600 on a margin account. This ties up probably close to like $3,000 or $4,000. This is a lot better than just selling a naked put. Like obviously I'd love to sell a naked put and get $700. However, a naked put on an IRA account for me is going to tie up like $47,000. So I'm going to go spread this thing out, still be willing to own the shares. And if I do this trade, 480 by 400, I can pull in $300 and, $325. And the probability of profit is about 94% with an elevated VIX. So, I mean, the chances of getting back down to April 2020 flows is pretty slim, especially by January 2027. And so if I can just stack in some of these trades, limit my exposure, I'd be willing to own up to like 200 shares at any given time. So if I did take the assignment here as I'm stacking these trades up, I'll take the assignment and I'll repair it. And I'll probably let this either sit for a bigger picture move where if S&P is down to, let's say this would be the SPY. So if the SPY is all the way back down here to 480 and I take an assignment, there's a lot that I can do with that.
Sure.
Right. I mean, I can sit here and stubbornly say like, I'm going to hold this until we hit all-time highs again. And I can make, $330 a share, which is a great return. But I'd also rather repair this for income, make a couple $1,000s, also put in a synthetic position, which is I'd sell a put, buy a call, right? So I can buy a call, sell a put, and price goes up from there. That treats it like I'm long 100 shares anyway with way less buying power. And I ride that thing for a nice like directional gain, and I just repair the own shares so I get my buying power back.
There you go.
So there's all sorts of ways to kind of time this market. I was talking to traders this morning. If you, let's say the market came back to retest 7,000 here, Nick, would you like maybe take a stab at being a bear at 7,000 over the next maybe like 30 days?
I think it kind of, we've talked about this a lot, like how do you express if you are bearish? Because I think it's fair to say right now, I'm a little cautious on markets. I don't know that I have I'm not going to go buy puts on the SPY if it nails that high. Am I going to stay cash heavy? Maybe sell some strangles on some stuff, possibly. I think that would keep me cash heavy, to say the least, in terms of some of my longer term stuff. I think that for me to get bullish from a momentum trade, because I have kind of like the two sides of things that I do from a momentum trade perspective, if we can break through these highs, and it kind of coincides with some good data on the Edge Finders overall report. If I take a look at this, like what would get me bullish basically from a short-term trade perspective? Right now, S&P's got a flat 0 score. Technicals looking pretty rough, mixed. I think that's fair to say.
Yeah.
The seasonality, we've talked about this many times. Edge Finders picking up on that seasonal February weakness that we tend to see. So there's enough here for me to say I'm not really super convinced in going long. If price action were to flip really bullish and start breaking through those highs, I could potentially see maybe a scenario in which I'm looking for, tight stop loss, looking at trail stops and see if I catch a runner. But for the most part, I'm pretty neutral on it. So I probably wouldn't short. I probably wouldn't go long until we get a stronger reading one way or the other. What about you? Okay. Would you add some short delta? So how would you approach that?
Yeah, so this is one, like, it's a pretty creative way to do it. I don't know if I'm going to get the fill that I want, but basically, if we're eating into this inefficiency from last week Thursday. If the market rolls over a little bit, I could see us coming back to retest these lows. But here's kind of a trade idea. If we came up to 69.30 or 69.40, here's a pretty simple trade. And there's two spots. It'd either be like the 69.40 level or it'd be the 7,000 level. What I'd look to do is let's just make the numbers really, really simple. I'm going to say that 7,000 is where I think like we're going to have another top and the market's going to stay range bound. So what I'd look at doing on the SPX is I'd probably go out. I mean, if we hit 7,000, I'd probably give myself like maybe a 4-day window and try to keep the risk as tight as possible. So let's hypothetically say that the February 20th, which is this Friday, let's say the market's sitting at 7,000. Well, I'd probably go out to like the 20 would be the end of the month. The 27th is the last trading day of the year, and I think that's on a Friday. Yep. So I try to do a 27th trade. So here's an example. If I were to say, okay, 7,000 is the top, I can do a sell 6,900 call, buy a 7,000 call. That's a bear call spread. Now this is, how many points wide is this, Nick? 6,900 to 7,000 is 100 points wide, right? Or I'm sorry, 1,000 points wide. No, I'm stupid. 100 points wide. Yeah. I was doing it early on a 6,000, so that's why I had 1,000 in my head. It's 100 points wide. Anyway, 100 points wide. So if my maximum is 100 points, if I put this trade in for $97.50 credit, my risk is $2.50 or $250. Watch this. If you can see my chart down here, can everyone see that I'm risking $250 to make $97.50?
Yep.
All I need price to do is get below 69.97.50. And for every point lower, I get $100. So if we were to hit 7,000, drop back down to, let's say, 6,800, that's a $2,000 profit. And I'm only risking $250.
Sure.
Like that's one way that I'd short it, because it's like, okay, look, I'll toss a couple $100 at the trade. If I'm wrong, it's capped, it's defined. Buying puts is expensive, especially the VIX is up. It's like, I'm just going to try to be creative with options to, kind of time this trade and get the proper risk reward profile. And would I plan on getting $10,000 in this trade? No, but if I could turn this into, $1,000 or $2,000, I'd actually love that trade a lot.
Yeah. There you go.
So a couple ways to be creative and get some bearishness that would just be a defined risk trade. That's all.
There you go. Chris, I'm watching gold also on the precious metals side. Yep. Always. Edgefinder actually gave us a bullish reading here, which is it's been quiet for a little bit, but poking back into a bullish reading here. Seasonality, as we discussed, another one here for the bull side. Also, price starting to trend up here a little bit. Crowd sentiment is also showing some bearishness on the put call flows here. So I do like gold as well to the upside, although I don't love this choppy price action. I'm watching it on the 4-hour time frame. I have some resistance points here, or a resistance point marked up here around the 5,100 level. Price has really gone from these really big moves. This massive volatility here has kind of dried up, kind of gone quiet here recently. But if we could get some more decisive price action to the upside, I saw somebody in the chat just asking, what are we thinking about gold, buy or sell? Of course, as always, each one of us, whether it's me on the show, Chris, any of our other show hosts, we all have individual trading styles, and everyone in the audience does too. So, I have a bullish lean on gold, but I am looking for a technical breakout above this area, and that is in line with my personal trading strategy and approach. Everybody's got their own, so this is absolutely not financial advice. We're simply sharing our thoughts and opinions as always, but I am looking for that breakout personally, see if we can get back above 5,100 on gold. Maybe we have a little bit more of a, it's not super likely. I would say there's, and maybe I'll get your thoughts on this too, Chris. I don't see it as super likely that we're going to, fly through those highs here this year. Yep. I can kind of see this trade maybe got really crescendoed right towards the end of it. And I don't necessarily mean that in the sense that, that's it, it's dead, it's going to go into a 10-year bear market per se. But I think that the easy trade on gold and silver, I don't see us going into another move like this with just easy upside move. I think you have the Fed chair changing, you have just some dynamics that have shifted away from that. You do have central bank buying still going on. You have high national debts. You still have reasons for gold to be bullish. But I think that the invincible trade, as I've been calling it, kind of cracked. And so I think we have a little bit of work cut out for us if you're bullish on this one. So I'm looking for a breakout with a tight stop. And hey, if it runs to new highs, that would be amazing. I know, Chris, you got a little bit of buying going on gold, and you were also open-minded and willing, if it does pull back larger scale to some deeper retracements to some key moving averages, that might give you a chance to actually load the boat more. So we'll see how this plays out. Any thoughts? I mean, Chris, in the last few years, I've seen you were really right. In some ways, I know you also beat yourself up a little bit about letting go of your silver too soon, but now, hey, that wasn't too bad of a decision to kind of reset. Any thoughts about gold versus silver now? We've seen the gold silver ratio adjust. If you're allocating to this side of things, I know you've mentioned wanting to potentially work up allocation to like 20% in the metals world.
Right.
How would that breakdown look like for you, do you think, for gold versus silver?
Probably 15.5. I think I'd go gold 15, silver 5, just because silver has the ability to run and be like more of the mania speculation. We need it for AI. It's got the industrial case. It's strategic now, blah, blah, blah. So the price could be just like off the rails, aggressive and speculative, versus gold, I think, just kind of maintains. I'm not saying gold can't be speculative. We clearly saw it. Like the retail crowd was really what got into gold and got into silver at the end, ran the prices up, and probably caused the crash at some point just because it became so contrarian. That, I mean, like I said, it was like the day that the GLD and SLV calls were matching the SPY. It's like that was the top. So anyway, I think if I'm going to go up to 20% allocation in metals, I'd say it'd be 15.5. But again, it's like I'm not buying anything at these levels. They're just dollar cost averaging in, and then obviously using some options way, way, way lower. So, SLV is going to be like 45 or 40. GLD is going to be 400 to 350 to 300. And I'm waiting. I want to point out one level for you on your gold trade. Just write this number down, 53.37. Because if we get a little bit of a near-term breakout, I could see prices stalling there. All that would be is that's kind of, I call this Gartley symmetry, just a fancy harmonic term. So the market would go down here. Let me change this to black. Market goes down on the swing. We go like so, find symmetry, and then that would be a chance to short gold, going back to this merge, as well as maybe resuming that this is the top, this is the bottom, this is an inside swing, and then we go back down to actually fulfill, that, like I said, the retest of the lows or that daily 200-day moving average to maybe, top this thing out. So if you are long on gold, if you get a runner, go to break even or better. If you get to 53.37 and it wants to keep going, great. But I would just trail a little bit more aggressively in case it turns there. That's still a pretty good trade. If you're up, a couple $100, that's still a great trade, obviously.
Okay. Yeah, no. And one other question for you. So what about other commodities like copper, platinum, any of that stuff? I know, you've kind of run a diversified ship. Would that be something that you like just kind of have some allocation in the portfolio to, or is it a trade type of thing for you? Would you just do some options on it? How would you, or if anything, I know copper, you've mentioned in the past, has had some really spready action on the option side. What would be your thoughts on that side of things?
So, I mean, platinum could be a good one. I mean, you can see that platinum looks a lot like gold and silver. I mean, it became pretty ridiculous. It's pulled back about 30%. Look, here's a pretty simple way. Like take this low high, draw a fib. Does it offer a play? I mean, to me, like let's take the use case out. Let's say, oh, it's so rare. It's so, who gives a shit? Like, look at the charts. So here's what I see. If you have a low and you have a high, and this market's going to give you a correction, give us this, find some fibs. There's where I want to buy some platinum. So if I want to buy platinum and I don't get that fill, then I can just sell puts down here and try to take a trade on PPLT if the options are decent. If it's not, then I have to just kind of wait, set some chart alarms, put in some bid or put in some buy limit orders, and just kind of be patient. So if I don't have the patience to wait, I buy a little nibble right now and satisfy the urge to say I need to get into platinum. But if it goes up to highs, I've got some money. I've got some profits. If it pulls back, which I expect it to, then I start building my position down here. So I like platinum. I like palladium. I like gold. I like silver. And you like the commodity space, this actually is a really good one to consider. DBC is a commodities basket. This has a bit of everything. I'll show you the summary here, but this shows we have stuff involved in, we have energy, precious metals, industrial metals, agriculture, futures contracts. Take a look at this on, let me go to my, this is DBC. I traded this one a lot during COVID, and it did pretty well. So here's the mix. So you're going to get some exposure to crude oil, gasoline, natural gas, crude, gold, silver, aluminum, zinc, copper, corn, wheat, soybeans, and sugar. I mean, that's a pretty healthy, pretty diversified basket of commodities. Whether some are up or some are down, it's like this from a technical standpoint. I mean, this has been you bottoming here for a while. We got a nice solid bottom at the 5.0 at the $20 handle. It's not a great entry, but going from 24 up to 30, I mean, it's not a bad entry. I mean, I'm not saying I'm going to bet the farm on this thing, pun intended for all the ag stuff they have, but that's a 26% return on the ETF. It's like, that's not bad. Yeah. It's not bad. Like what stock right now looks like we got a pretty safe case to go 26% higher. Sure. Not a lot, in my opinion, not a lot. So
yeah,
one way to do it.
I think I kind of like the environment right now. And by the way, we do have meeting minutes coming out in here in just a second, guys. We'll
I do have to run it just after 2 o'clock. I got to bounce. I got another live session actually at 2.
No worries. I got it from there.
Okay.
Actually, Chris, we'll let you go just so we don't cut any further into the 2 o'clock times. Thanks for coming on, man. Appreciate you taking over the show and hanging out.
All right. See you tomorrow.
See you, man.
Bye.
All right, guys. So we've got meeting minutes coming out here in just a second, and we will get everything sorted here. I definitely want to talk a little bit more about this oil trade. It's kind of a shocker. Like yesterday, I made a video, and I was pretty much ready to get stopped out of the trade, and just goes to show how quickly, how violently oil can move. I mean, commodities in general, they're just different, man. They're different than other instruments in the sense that, you know, the SP500, the NASDAQ, many people don't know this, but silver in many ways can be much more volatile than the S&P 500. Silver can have one-day moves that are very, very violent. Now, gold longer term tends to not move as much as the S&P 500 and the NASDAQ. But recently, obviously in the last 6 months, it's had a lot more volatility here, but kind of interesting to see. So meeting minutes are dropping here now, guys. What we'll do here is I'm just going to keep an eye on some news outlets here. This is not a Powell speech, so I want to clarify this because people always ask this question. If you're newer to this stuff, no problem at all. But please understand that FOMC meeting minutes are not a press conference with Jerome Powell speaking. In the future, it'll be Kevin Warsh, not Jerome Powell speaking. So we got to get used to that. But Powell's not going to be speaking. It is not a press conference event. It is a drop of notes behind closed doors amongst Fed committee members. So we are going to be keeping an eye on the headlines to see if anything major takes place within those changes. Sometimes you get some market moves off this. Sometimes you do not. What I've got here on the screen as we wait to see if there's anything impactful coming out. Stock market in the kind of 3 quadrants here. You have Bitcoin, gold, silver, dollar, and oil all on the screen. And just again, look at that oil move here. Oil is ripping today, and price action just keeps pushing along here. If you guys, for my regulars, my friends in the chat here, help me out. If anything comes across your screen in terms of meeting minutes, I'm just going to read a couple that I'm finding. If you see anything of interest, please drop it in the chat for the to share with the class. I've got this on the screen here. Several participants indicated they would have supported a 2-sided description of future rate decisions, reflecting possibility hikes could be appropriate if inflation remained at above target levels. Several participants commented that further rate cuts would likely be appropriate if inflation were to decline in line with expectations. Okay. Fed got another one here. Yeah. Okay. That one I just read was kind of big. Further rate cuts would likely be appropriate if inflation were to decline in line with expectations. Okay. Fed minutes, the vast majority of participants judged that labor market conditions had been showing some signs of stabilization and that downside risks had diminished. Very interesting. At least off the rip, that's going to come across a little bit more hawkish. Inflation rates could come down if inflation continues to come down. That's pretty obvious. Judging that the labor market conditions had been showing strength or stabilization and downside risks diminishing, that is a little bit more of a hawkish sounding comment. Fed officials split on where interest rates should go. So again, guys, I am reading updates here across my screen. We've got a bunch of stuff on the screen just for you to keep an eye on it. In terms of price action reaction so far, nothing too big. Dollar index firmed up before the event. We'll see if it can hold those gains. So far, seems to be holding the gains. So I'm going to keep an eye on what we've got news-wise. Participants from the Fed minutes, participants observed economic activity appeared to be expanding at solid pace. Generally anticipated pace of growth would remain solid in 2026. Participants generally assessed that with appropriate monetary policy, the labor market would likely stabilize and then improve this year. Most participants cautioned that progress towards a 2% inflation target might be slower and more uneven than generally expected, and judged risks of inflation running persistently above target was meaningful. Participants anticipated inflation would move down towards the 2% target, though pace and timing remained uncertain. Very interesting. At least from what I'm gathering here, it sounds a little bit more hawkish than expected. It seems to be reflecting in the dollar as well. And again, you might say, well, the market's not moving very much. Well, we'll look at the dollar this morning. The dollar moved a lot. So if there was something that didn't confirm this idea, we'd probably see dollar index down. But so we're seeing a little bit of the jobs market is likely to continue, but to improve, but inflation might take some time. That sounds a little bit more hawkish than previously expected. Federal Reserve officials signaled renewed worries over inflation. Several suggested they may need to raise rates if it stays above their goal. We've not been talking about raising interest rates for a minute. And if there is further conversation about raising interest rates, that's where the dollar is going to go right there. It's going to go right through TradingView's screen. I'm very curious to see if there's any more commentary like that, because, we've been living in this paradigm where the only theory is that, well, the Fed's going to cut rates, just a matter of how soon. If you're seeing some stuff, if the Fed does start to get the idea that the jobs market is improving, and yet inflation is still working its way through some stuff, I wouldn't say that's like grounds for rate hikes just yet. But let's just map a scenario out really quick. What would it take to get the Federal Reserve to hike interest rates? A lot, because they don't want to hike interest rates. Hiking interest rates is problematic because we have this huge national debt. It's already so expensive to administer our current national debt by issuing new interest. It's already very expensive for the U.S. to pay back its existing national debt, and it's trying to lower interest rates so that we can borrow back new debt at lower interest rates. If the Fed raises interest rates, it has to start paying back its debt with new borrowed debt at higher interest rates. Makes things more difficult down the road. So they don't want to raise rates. They really don't want to raise rates. We have had some improvements in inflation, but we're at 2.4%. And if this number, let's just give a hypothetical scenario. How do you see rate hikes from the Fed? What has to happen? This number has to stay sticky and stubborn and maybe even start to go up more meaningfully. You get that coupled with, let's get ready for it. Hold on. Let me find it. Labor market data. Unemployment rate doing what it's doing. If it keeps going, if we stay, if we're at 4.2% unemployment rate, the Fed's going to say the labor market is holding up just fine, and inflation's starting to blow out. If inflation starts to blow out, the Fed very well could shift its posture from how would it start? Well, for starters, they wouldn't say we're going to hike rates. They would say, we think we're closer to neutral rates than we previously thought. They would say, we think essentially there's not really a need to cut interest rates any lower. That would be decidedly more of a hawkish narrative, because then what the market would hear is, oh, wait a second, we may actually hike next rather than cut. So do I think that that's what's going to happen? No, not necessarily. So far, let's take the benefit of the doubt. Inflation is not rising dramatically right now. Inflation is actually making progress. So I do still think that it's a fair trajectory that the Fed, in my opinion, the next move will be a cut of interest rates. I don't think that is that's not against consensus. That is pretty consensus to think that the Fed is likely to cut rates next. But yeah, I mean, this is something you've got to keep an eye on, because look, if you get a Fed that is starting to see the jobs market steady out and inflation not improving, like let's say inflation starts to go up again, you could very well see the Fed signal that no more rate cuts are coming. And the dollar could very well strengthen. We're at a long-term low point in the dollar index. I think right now, one of the challenges is, it's very easy to look at the U.S. situation and say the consumer doesn't feel great and national debt is high. But remember, currencies are all about comparison to peers. And when we talk about comparison to peers, we've built tools to help us to do that. So when I look at like USD, let's just look at USD pairs. I don't have a ton that are looking really obvious. Maybe the pound dollar to the bearish side looks kind of good when we compare British pound versus US dollar. I do think that this one might be one that I do like the short side on. And we are starting to show some signs of rolling over. I'd like to see some failure at critical levels of support. I actually could see, if I was to take a dollar long position right now, the pound dollar looks like a pretty solid candidate for me. We can also take a look at, let's see, if I was to look at economic heat maps for UK specifically. It's part of the reason I don't love the British pound right now is they had weak GDP numbers come out. CPI came at 3% this morning. PPI also came in at 2.5%. Unemployment rate ticked up to 5.2%. Meanwhile, the US employment data was a little bit strong. So comparatively speaking, I would actually say I like the dollar over the British pound for now. Let's see where we are with this on a macro scanner level, economic strength index. And I'm just going to actually sort British pound versus US dollar because I'm actually interested in this. And we can see that, let's actually see if we can zoom out. How much further back can we go? I don't think we can go that far back. Sorry, I just went into the future. Let's just go January to now. Can we do that? Okay, that's as far as we can go. The blue shows the US dollar economic strength index over time. This looks at GDP growth, unemployment rate, interest rates, and CPI relative to the group, right? And this is what people get wrong about currencies. People don't understand that you cannot just judge the US dollar only looking at the US situation. You have to judge the US dollar based on its situation relative to its peers. It's a race, right? Currency trading is a race. You are saying which currency is the fastest, which one is the slowest. And when we look at the group, all economies have their own issues. They all have their own problems. They all have geopolitical events going on and things that, all sorts of stuff, right? When we are trying to gauge currencies, which one is strong, which one is weak, some of the key categories that I look at are things like GDP growth, unemployment rate, interest rates, and CPI. This gives me an idea of some of the four kind of big pillars of economic statistics, economic health. And right now, the US has some of the best on that list for a long-term. Please understand, this is not a short-term indicator. This is more of a longer-term fundamental ranking indicator based on latest available data rather than expectations. This gives me a little bit longer term, a bullish outlook on the US dollar, at least for now. It has stronger GDP growth than the rest. It has very strong unemployment rates. Interest rates are elevated in the US, which offers yield to people who, move money into dollars. CPI is 2.4%, creating a nice real yield. So currency flow or flow of currency should kind of move into the dollar rather than away from it. In the long run, one of the simplest ways to think about currencies is, where does money want to flow? It wants to flow where real yield is present. And real yield is present in US treasuries, US bonds, etc. So here's a good question. So if US dollar is bullish, gold should go down, right? Well, this is why, trading is hard. Not necessarily. Gold and the dollar can and have in the past moved together. Because remember, the dollar is the dollar versus the rest of the currencies. Gold is gold versus all currencies. So there is a situation in which, if we were to line everything up, it would be gold, USD, and then all the other currencies. And if all fiat currencies are weakening, whether it be for a monetary policy, being more dovish and printing more money, etc., that scenario can make gold look really good. And the US dollar can be losing purchasing power, but it can be losing purchasing power slower than some of the other currencies that we watch. Does that make sense? I know that was kind of high level, complicated stuff, but people have that question all the time. No, dollar and gold do not always have to move inversely to one another. There is a scenario in which dollar is strong versus the rest of the currencies, but gold is strong relative to all currencies. Does that make sense? I hope that makes sense, but that is something to be aware of, is that type of scenario. So longer term, I do see the dollar strengthen against peers. Does that mean I think that the dollar is going to be, the best spot to be in and that we should short gold? No, that's not what that's saying. That's saying US dollar versus its peers. I like dollar to the upside, of course, as always, not financial advice. I'm just sharing my thoughts and opinions. If we take a look at the US dollar here for a second, just some of the metrics on US data, GDP growth strong, manufacturing and services PMIs both came in strong. We did also see some institutional accumulation on the COT report, 4-hour uptrend. Monthly seasonality looks good in the month of February. We also have CPI. We also had PPI, 2-year yield. I still overall, I think dollar has a little bit of upside potential. So we'll see. It's been beaten down for a while. It's been ranging for a long time. I wouldn't be surprised if it does make a move to the upper limits of this range. If that happens, I start to get a little skeptical. But for now, I do think that you have some potential upside in the dollar index. It seems like bulls are firming up here, potentially trying to form a higher low. Watch this break of 98 for potential short-term momentum to pick up, and maybe the bulls take it from there. Nick, what are your thoughts on gold short-term? So I like gold, but I have mentioned this earlier. Specifically, I like gold if you can break through this level here. So gold's got a bullish rating within Edgefinder right now, which is great, but I'm looking specifically for a breakout through this 5100 level as kind of a cue for pullback longs. The reason I'm waiting for that is because I think price is kind of range bound here. I'd like to see some kind of strong bullish breakout to signal that maybe momentum is starting to flow in favor of gold longs. And so you've had this back and forth where we've been seeing gold down 2%, up 2%. These are big moves, by the way, for gold. This is way above average moves for gold over a long stretch of time. Huge moves, actually. Silver and gold are both moving with a lot of volatility. I like gold better. I, again, would be waiting and watching for a breakout above this 5100 level on the 4-hour chart for possible long side continuations. I want to buy the Edgefinder, but I want to share the cost with someone. So we don't have licenses that are shareable. It's linked to a specific unique email and access for each person. But if you are interested in getting access to the Edgefinder, 2 things to note. Number 1 is that currently it is 45% off during our live streams if you send in a direct message to our support staff. We'll drop a link here in the live stream chat. If you want to get access to Edgefinder for yourself and start trading with it, I highly, highly recommend you take advantage of the discount if you've been thinking about buying it, because you will save a tremendous amount relative to what you usually would have to pay to get a copy. So there's 45% off right there. And part two is if you need a payment plan or some way to split it up so that it's more affordable to your current budget, you can do that. So you can pay it over the course of 2 months instead of just paying it once. So there you go. If you're interested in getting access to Edgefinder, take advantage of the discount while that lasts. It's only running through this week, so we've got a couple days left to take advantage. Can Edgefinder run on Mac? Yes, it is all browser-based. Check this out. This is the coolest part about, or one of the cool things about Edgefinder. This works on any of your devices. If you have a mobile device, if you have a desktop, heck, you can pull it up on like an Apple TV. Like if you get the Looker Studio app, I have done that, believe it or not. Edgefinder, again, it's a browser-based tool. There's no download. It's like super simple to set up. It's not like an install process. It is literally, you purchase a copy, we send you a link, and you are unlocking just mountains of data that we've built, screeners, software tools. We have traders all around the world using the tool. Don't miss the discount. If you are somebody who is an aspiring macro or fundamental trader, or you want to track market sentiment, crowd sentiment, institutional activity, if you're looking to track stuff at a level you have never tracked it before, don't hesitate. Don't miss out. Edgefinder discount is going on right now. Nick, do you think the AI disruption in stocks is cyclical or structural realignment? Interesting. Here's what I think about the AI disruption stuff. I think that the AI concerns, which previously, by the way, were AI hype, I think it's important for us as a community here to just take a second to recognize how powerful narrative is. My friend Marco, who comes on the show, you guys know him, I'm sure, if you watch regularly. Marco, he put out a video. I think you guys should check it out. If you find him on YouTube, maybe add it to your watch later. If you're a YouTube addict like me, add this video to your watch list. Head over to Marco's Trading Journey on YouTube. And he just did a video talking about narratives right now. There's a couple narratives. Crypto is dead. He said the Buy Japan narrative is big right now, and the AI disruption narrative. I think it's important for you as a trader, if you're learning, I'm learning, we're all learning, the narrative shift can be so violent and so sudden and so nuanced. Literally, this little acronym, AI, went from being something everybody was saying to tout and excite, listeners about stocks, to now all of a sudden, AI is this cannibalistic monster within the stock market that is going to eat away the moats and earning potentials of many of legacy businesses that have existed over the decades. That was something out of a book. Someone's going to write that down, and I want a piece of the action if you sell a book on that. I'm just kidding. I am not the authority on this topic of AI, but from a market perspective, right? The marketing around the word AI very quickly went from, it's a amazing, game-changing, earnings-driving thing, to now it's this thing that's eating away at earnings potentials for businesses. Really interesting. Now, what do I think about that? Well, structurally, I think that dilemma is not something that is going to pass very quickly. So a year ago, right around this time, we had a dramatic sell-off in stocks. Of course, many of you will remember that was the tariff and trade negotiation stuff that was going on between the US and many of its allies and rivals, right? It shook the markets to their core, but I was making the point, although I was early, so I'm not going to, claim I was perfectly correct about this, but I was making the point as soon as I want to say March, and you can go back and watch my videos, they're still up at the time. I started saying that I think that the Trump administration will see this and they will say, just like any president, would say, we don't want the stock market to crash. The stock market crashing is terrible for voters, for the appearance of for your approval ratings. Nobody wants their 401ks to tank. And so a president will do anything most of the time to save that. And that is exactly what happened. I was a little bit early in thinking that by probably a month and a half, but that was a dilemma that could be taken away. And it was. And if you listen to the shows, go back in time, watch those videos, I got to say, I know I'm patting myself on the back here. That was one of my better calls of my career. This and COVID, I did really well with. COVID, a little bit different to this. But anyways, this scenario last year, the reason I'm bringing this up, I'll wrap it into AI in just a second. This fear could be taken away, and it was taken away. How? How could this get taken away? Well, the Trump administration could walk back or come to the table, or other nations could come to the table because they also don't want to see their stock markets get trashed. And we could actively see resolutions to that problem. And so my bet when I bought stocks, and I went shopping last year around this time, the reason I was feeling very good about that decision, or that it was a good risk reward asymmetric return bet, was that it could be taken away. And so I thought that because it could be taken away by administrations, that it likely would be taken away when pain got too much. There was limited downside in my view. And I know this is so hindsight speaking, but again, I encourage you to go watch my videos from that time. I was buying the dip like crazy. Now, I tell you that because now we are seeing some concerns that I don't see easy takeaway of that pain. If AI disruption starts to freak out the market more, I don't see a snap V-shaped move right out the gate of that. I see that as more of a structural dilemma we have to deal with over some time. I think software companies, if they have something to prove now, software companies have gotten nailed here in recent trading weeks. Look at IGV. This is the ETF that tracks software stocks. This thing's gotten disgustingly sold off real quick. And so you have the scenario, it's like, what can be done to just snap that fear all the way back and we're all good to go? I don't know. When the tariff stuff was going on, I had this feeling that, well, all we have to do to see the stock market return the other way is for that stuff to stop worsening. Once tariffs are behind us. So anyways, you see what I'm saying? That's kind of my thought. I think this is more structurally challenging than the now. And again, the market is rotating really efficiently, meaning we're seeing other areas. Take a look at energy. Take a look at, versus technology. Technology is not doing so hot. IGV, I just showed you, not doing so well. Consumer staples doing great. So there's some companies that are winning big time out of this, who are, the money is selling out of tech and going into these other places. At least that's been the theme. We'll see if it continues. But I think that that's something that, we want to keep an eye on. Is the reason this chart looks choppy and sideways is because some money, as Chris pointed out earlier in this stream, some places are getting big wins out of this. Consumer staples, energy stocks, industrials, and other companies are taking the hit. So we'll see. We'll see. But my personal opinion is that I like software stocks, specific ones, not all of them. I do think that AI disruption is a potentially real force. I don't know about you guys. If you don't think that AI disruption has potential to actually erode away businesses, you must not be using AI, because this stuff is crazy. I think everyone I know at our workplace, in my personal life, everyone's using AI, and it's changing how they do so many things. So to just write off this as, oh, it's just a narrative that is meaningless and it has no legitimacy, I think that's a little naive. Now, does that mean that everything getting sold off deserves to be crushed? No. There's a middle ground that I think actually makes a lot of sense. Good software companies that own their own data, that they have, pioneered and made way for the businesses that they have monopolies within, right? They can survive, but some stuff will get completely disrupted by AI. Gold just dropped. Where? On the 1 minute? I guess it did a little bit. Anyways, I'm looking for that breakout. Like I said, if we can get a gold breakout through 5,100, that's an idea for me. Oil, if I make any changes to this, I will update you guys inside of the Discord. I just moved my stop loss from here to here, so I did trim a little bit of my risk, but I'm looking for a breakout through the 66 level as an opportunity to trail stops further. So we'll see. We'll see how that plays out. Yeah, look at dollar. Dollar's ripping here, up 0.63% now. Again, we'll see if dollar can get through this high. If you get a solid closure above 98, I wouldn't be surprised if dollar makes its way back up to 99.50 or so, where this level of resistance here. I think that's kind of your next obvious zone. NASDAQ seeing a little bit of pressure too. Yep, there's the 5 minute. Nothing crazy, but seeing a little bit of sell pressure. We'll see. I would love to see. Thanks for your answer, Nick. Of course, no problem. DXY bottomed. We will see. We will see. That was a little bit more of a hawkish Fed meeting minutes than I would have guessed. It seems like there was a little bit of an undermining of labor market worries and more concerns about inflation, which is more hawkish. Did the Fed have its meeting yet? So it's not having a meeting. It is notes from a meeting that happened behind closed doors released to the public. And those notes were a little bit more hawkish than expected, I would say. We'll see. I'm going to wrap up the stream there, guys. We had a remarkable stream today. Shout out to everybody. I know a lot of you guys might still be listening, to our streamers who took the reins and got us through today. This was a great stream. Shout out behind the scenes as well to James, producer. Awesome stuff today. Great stream. Don't miss our sale. We're doing 45% off on everything here in terms of our software. If you want access to Edge Finder or Stockbox, get 45% off. Send us a message by clicking a link in the live stream chat. Thank you all for being here. Having a good, I hope you guys have a good rest of your day, and we will see you back on the next one. Peace out.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.